Okay, right. So let us proceed further now. So let us continue with our day three of our preparation. So in the previous 2 days of that IDT marathon, so what and all we have covered. So let me make a list of all the chapters, whatever we have covered now. First, I told you about intro. Then we had supply related chapter discussion. Thereafter, just in the previous session, we have completed registration part. Thereafter, we have done something relating to charge of GST, where we have understood the bunch of services which are covered under reverse charge mechanism. And then we have also covered composition levy related concept also we have covered, which is actually a part of charge of GST only, but composition levy altogether a separate concept. So that also we have covered it in the previous session. So till now, this is what we have done. So now we are going to come to that bunch of chapters from today especially. So I'm going to hit that bunch of chapters, that cluster of chapters from which there will be a compulsory question in the exam. So those chapters we are going to hit now. So the first, I have three chapters in my mind. So we are going to talk about something relating to time of supply. We are required to revise regarding time of supply. Then we have value of supply, and thereafter we have place of supply. So today on this day three, so since we are done with intro, supply, registration, and also charge and composition, so now the next bunch of chapters which are going to be very very important from the examination perspective, from which there will be a compulsory question. So that bunch of chapters we are going to take up now. So three chapters will fall into that category. So one is time of supply, value of supply, place of supply, TOS, VOS, POS. So these three chapters we are going to pick up for revision now. Okay, so without any delay further, first I will try to pick up the time of supply chapter. So first we'll try to revise the time of supply chapter, very small chapter, very simple one only. We'll try to complete it quickly, will not take much of a time, very small chapter. So once we are done with the time of supply chapter, we are going to take place of supply, we are going to take the value of supply, then place of supply. Those two chapters will take some amount of time. So let us try to understand what exactly is this time of supply chapter talking about. So if you have attended the introduction session, I have already told you in the introduction session. So first, goods or services must be there. A taxable event called supply should have taken place, and that supply should be a taxable supply, and that supply should be made by a taxable person. Then only GST will be imposed. Now, okay, sir, GST will be imposed, but what is the point of time at which I am required to make the payment? When I am required to make the payment, what is the point at which I will be liable to make the payment? It is not something like a business person on transaction to transaction basis, he will collect the amount of GST and pay to the government. It will not happen. It is not going to happen. So you don't expect the businessman on a daily basis, he will do hundreds of transactions. Do you think after completion of each and every transaction, he will transfer that amount of GST to the government? No. So there will be a certain time limit. There will be a certain time frame within which you are required to make that payment of GST to the government. So what is that time frame when you will be liable to pay the amount of GST? So that is something which is getting clarified by the time of supply chapter. So without any delay further, let us try to understand what is that time of supply. And when it comes to time of supply chapter, we are required to cover only two sections. One is section number 12, which is talking about how to determine the time of supply in case of supply of goods. Then we have section number 13, which is talking about how to determine the time of supply in case of supply of services. Thereafter, we are also required to discuss one more thing, which is regarding section number 14. What will happen if there is a change in rate of tax? So this section number 14, I will come back to that later. So first, primarily, we have two sections which are required to be covered as a part of this chapter. One is section number 12 and the other one is section number 13. So what is section number 12 talking about? What is section number 13 talking about? So section number 12 is talking about how to determine time of supply in case of supply of the goods. Section number 13 is going to talk about how to determine the time of supply in case of supply of services. Now we have various subsections. We have 12 subsection 1, 12 subsection 2, 12 subsection 3, 12 subsection 4, and even we have 13 subsection 1, 13 subsection 2, 13 subsection 3, 13 subsection 4. So each subsection will be talking about different cases and how to determine the place of supply. So various subsections are there, both under 12 subsection 1 and 13 subsection 1. We have various subsections. Each subsection will be talking about different instance and how to determine the time of supply in that instance. So we will try to pick one by one and we'll try to finish it off. Sir, what does 12 subsection 1 say? So coming to 12 subsection 1, which says that the liability to pay tax on goods shall arise at the time of supply as determined in terms of the provisions of the section. So which means 12 subsection is going to talk about applicability. So what they're saying is whenever you are making the supply of goods, you have to determine the time of supply as per the provisions of section number 12. So they're talking about the scope of section number 12. Similarly, even if you refer 13 subsection 1 also, they will talk about that section says that whenever you are making supply of services, the time of supply you have to determine it by following the provisions of section number 13. So subsection 1 is going to talk about applicability of the section. So subsection 1 of 12 subsection 1 says if you are making supply of the goods, determine the time of supply as per the provisions of section number 12. Section number 13 says if you are making supply of services, determine the time of supply as per the provisions of section number 13. So it is talking about applicability. So now we will come to 12 subsection 2. Sir, what is 12 subsection 2 talking about? In case of supply of goods under forward charge mechanism. In case if you are a registered person and if you are making supply of goods under forward charge mechanism, what will be the time of supply? So you are a supplier, you are making some supply and that supply is covered under FCM only. So what is FCM? So in case of forward charge mechanism, as we all are aware, supplier will collect the amount of GST from the recipient and he is required to deposit that GST amount with the government. That is what forward charge mechanism no. Supplier will collect the amount of GST from the recipient and deposit that amount with the government. So this is what forward charge mechanism. So in case of forward charge mechanism, as a supplier, when you will be liable to pay the amount of GST. So this I will try to explain it in one simple manner. So it is talking about forward charge mechanism. Subsection 2 is talking about forward charge mechanism. So in case of forward charge mechanism, how to determine the time of supply, sorry. So now I will tell you there is a detailed provision there, but I will try to summarize it in one simple manner. See, in case if the supplier of goods is either a composition dealer, if he is a composition dealer, or he is supplier of specified actionable claims, or if he is a supplier of specified actionable claims. In that case, the time of supply will be earlier of 3 dates. In case if you are a composition dealer or if you are a person who is making supply of specified actionable claims. Sir, what are that specified actionable claims? That we have already covered it in the supply chapter. So there are 6 specified actionable claims are there. Only that supply of specified actionable claims will fall under supply. Remaining all actionable claims are neither supply of goods, not even supply of services. So if you are a composition dealer, if you are a registered person making taxable supply, but you are a composition dealer or if you are a supplier of specified actionable claims. So time of supply will be earlier of 3 dates. Sir, what are they? Date of invoice or last date or due date. Last date for issuance of invoice or due date for issuance of invoice or date of receipt of payment. Date of receipt of payment, whichever is earlier. That's what they say here. So in case if you are a composition dealer or if you are a supplier of specified actionable claim, so what will be the time of supply, sir? Earlier of 3 dates. Date of invoice, if you are giving the invoice, that invoice, or due date for issuance of invoice, what will be the due date for issuance of invoice, that date, or date of receipt of payment, whichever is earlier. So earlier of these 3 dates will be considered as the time of supply. That will become the time of supply. In case of others, sir, I am a supplier of goods, sir, but I am not a composition dealer and even I am not making supply of specified actionable claims. In this case, what they have told is ignore the date of receipt of payment. Ignore the date of receipt of payment. Time of supply will be date of invoice or last date for invoice. Last date for issuance of invoice as per provisions of section number 31. So whichever is earlier, that only will become the time of supply. Understood? So in case of others other than composition dealer and specified actionable claim dealer, so they have asked us to ignore the date of receipt of payment. Even if you receive the payment in advance also, you will not be liable to pay the GST at the time of receiving advance. When in case if you are a registered person making supply of the goods, but you are not a composition dealer, but you are not, and also you are not engaged in making of supply of specified actionable claims. So like this you have to remember. So for these 2 people, earlier of the 3 dates. For all other people, earlier of only 2 dates, date of invoice or last date for issuance of invoice. Okay, so this is what 12 subsection 2 says, how to determine the time of supply of goods under forward charge mechanism. So they have given so much of elaborated points here, but I tried to summarize it here in a one simple, whatever they are able to find it in the lengthy paragraphs, I tried to summarize it here in a one simple form. So now one more thing I have to clarify it here. Sir, you are saying date of receipt of payment, no? What will be considered as date of receipt of payment? What will be considered as date of receipt of payment? So date of receipt of payment means the act says that, the explanation says that date of receipt of payment means the date on which amount has been recorded in the books of accounts or date on which amount has been credited in the books of accounts, whichever is earlier. So what they have told, what do you mean by date of receipt of payment? Date on which amount has been recorded in your books of accounts. So when you receive the amount and all, you will write an entry in the books of accounts, no? So date on which entry has been recorded in the books of accounts or date on which your bank account has been credited. You are a supplier, no? So you will receive the amount, no? Amount will get credited. So date on which amount is recorded in the books of accounts or date on which amount is credited in the bank account, whichever is earlier, that will become the date of receipt of payment. Understood? So this is what forward charge mechanism. Now similarly we have 13 subsection 2, which is also talking about how to determine the time of supply in case of supply of services under forward charge. how to determine the time of supply in case of supply of services under forward charge, that is contained in 13 subsection 2. Let us see what they say. So for supply of services which are liable to pay tax under forward charge mechanism, the time of supply will be earlier of the 3 dates. So they have mentioned dates, they have mentioned some dates. So within that within that dates, whichever is earlier, you are required to determine the time of supply. So it depends on two cases. Number one, if the invoice is issued within the prescribed time limit, in case if you are making supply of services and you are required to give invoice. So if you refer to section number 31, time limit for issuance of invoices, you can issue the, in case of supply of services, you can issue the invoice within 45 days. Within 45 days in case of banks, financial institutions, etc. In case of all other entities, you are required to issue the invoice within 30 days from the date of provision of service. So time limit for issuance of invoice, that will be there in the tax invoice chapter. So in case if you are giving the invoice within the prescribed time limit, then date of issuance of the invoice or date of receipt of the payment, whichever is earlier. In case if you are issuing the invoice within the prescribed time limit, date of issuance of the invoice or date of receipt of the payment, whichever is earlier. Sir, what if invoice is not issued within the prescribed time limit? Let us say I am making supply of services under forward charge mechanism, but I am not giving the invoice within that prescribed time limit. So let us say I am a chartered accountant. I made the provision of service. 30 days from the date of provision of service is also over, but still I did not give invoice. That means you are not giving the invoice within the prescribed time limit. Sir, then what will be the time of supply, sir? They say in that circumstances, the time of supply will be date of provision of service or the date of receipt of payment, whichever is earlier. Date on which you have provided the service or the date of receipt of consideration or the date of receipt of payment, whichever is earlier. Understood. So one more point they say here, in case if the above methods are not applicable, if you are unable to determine the time of supply according to the above rules, let us say for example, date of provision of service is not available, date of invoice is not available, date of receipt of payment is also not available. So because of some reason, if you are unable to determine the time of supply as per above methods, then the time of supply will be the date on which recipient of service shows receipt of the service in his books of accounts. So in case as a supplier, you are making supply of service, from your records, it is not, we are not able to find out what is the time at which you have provided the service. What is the date of receipt of payment? You did not issue any invoice also. In that case, the date of in that case, time of supply will be considered as date on which your recipient has recorded that service in the books of accounts. So date on which the recipient of service shows the receipt of the service in his books of accounts. That will be considered as time of supply. Understood. So this is what regarding 13 subsection 2. So we have covered what is the time of supply in case of forward charge mechanism in case of supply of goods. We have also covered what is the time of supply in case of supply of services under forward charge mechanism. Clear everybody till here? Next. Now let us come to subsection 3. Subsection 3. See, wherever necessary, there only I will draw the charts. Remaining I will try to read it from the material. Sir, what does subsection 3 talk about? Subsection 3 will talk about even 12 subsection 3 and also if you take 13 subsection 3. So subsection 3 is going to talk about how to determine the time of supply in case of supply of goods or services under reverse charge mechanism. 12 subsection 2 is talking about forward charge mechanism. No, 12 subsection 3 will talk about in case if you are making supply of goods, but you are a recipient who is liable to pay the GST under reverse charge mechanism, what will be the time of supply? Similarly, if you go to 13 subsection 3, in case if you are receiving the services which are taxable under reverse charge mechanism, as a recipient, you are required to discharge that amount of GST with the government. So what will be considered as time of supply? That is covered under 13 subsection 3. So let us try to understand what will be the case in case of supply of the goods, and then we will try to understand what will be the case in case of supply of services. So first I will talk about 12 subsection 3, time of supply under reverse charge. They simply say that earlier of 3 dates. They have given 3 dates, earlier of 3 dates they are saying it. Sir, which are the 3 dates? The date on which goods are received. Date on which you are receiving that goods. Number 2, date on which payment is recorded in the books of accounts of the recipient. Or date on which the same is debited in his bank account, whichever is earlier. Simply if I have to put a date of payment. Date of payment, when you are making the payment, because here you are a recipient. In case of reverse charge mechanism, recipient is liable to pay the amount of GST. Recipient will not collect the amount. Recipient will pay the amount. That's why they use the term debited here. So date of payment, if I have to simply put it, and what will be the date of payment? Date on which a payment is recorded in the books of accounts of the recipient, or date on which the bank account of the recipient has been debited. Okay. And next, one more thing, date immediately following 30 days from the date of issuance of the invoice. Date following 30 days, that means 31st day. Don't write 31st day in the exam. For revision I am using it. So date following 30 days from the date of issuance of the invoice. Your supplier will give invoice, no, from the date of invoice, 31st day. 31st day, but you have to write in the exam date immediately following 30 days from the date of issuance of the invoice. This only you are required to write it. 31st, for understanding, for remembering, I am giving you a shortcut there. Able to understand? So in case of supply of goods under reverse charge mechanism, the time of supply will be earlier of 3 dates. Very simple here. 3 dates, whichever is earlier. Number 1, date on which goods are received. Number 2, date of payment. And what will be date of payment? Date on which the payment is recorded in the books of accounts of the recipient, or date on which his bank account has been debited. Number 3, 31st day from the date of issuance of invoice by the supplier. Whichever is earlier, you have to calculate all these 3 dates. Whichever is earlier, that will become the time of supply in case of supply of goods under reverse charge mechanism. However, they have told one note point here. If it is not possible to determine the time of supply by using these parameters, because of some reason, if you are not able to determine the time of supply as per the above 3 things, then the time of supply will be date of entry of goods in the books of accounts of the recipient. So let us say, for example, the date on which you have received the goods, that date is not available, or you made the payment in cash, so payment entry you did not record, even debit in the bank account is also not there, or the supplier has not given you any invoice. So in any of these circumstances, if you are unable to determine the time of supply according to the above rule, then what simply they are saying is date of entry of goods. Date of entry of goods, date on which that goods have been recorded in the books of accounts of the recipient, when they have been entered in the recipient's premises, the date of entry of goods in the books of accounts of the recipient of the supply will become the time of supply. So if you are able to determine according to this, determine. But in case if you are unable to determine the time of supply according to the above rule, the date of entry of goods in the books of accounts of the recipient of supply will become the time of supply. Understood? So this is what 12 subsection 3 says. Now 13 subsection 3 will also be there. 13 subsection 3 will talk about what? So 13 subsection 3 will talk about what will be the time of supply in case of supply of services under reverse charge. Let us see what they are trying to say here. So time of supply of services under reverse charge will be earlier of the following. So here also they say 3 dates. What are they? Date of payment, date on which you have made the payment. So once again, sir, what do you mean by date of payment? Same, date on which payment is recorded in the books of accounts, or date on which bank account has been debited, because here also it is recipient will pay, it is a bank account will get debited. So date of payment, which will be nothing but date on which payment is recorded in the books of accounts, or date on which payment is debited from the bank account, whichever is earlier, or date immediately following 60 days from the date of issuance of the invoice. So this I will simply put it as 61st day from the date of invoice. So if the supplier is registered person, he will give the invoice, no? So 61st day from the date of issuance of the invoice by the supplier. And one more point also they have added, date of issuance of invoice by recipient, where cases invoice is required to be issued by recipient. See, there is something called self-invoicing. There is a concept called self-invoicing. Let me try to introduce that here for you. So just simply I will try to recollect that provision. So there is something called self-invoicing. Sir, what is this concept? Let us say, for example, there is one supplier. Okay, so this supplier is making a supply to a recipient. Okay, this supply is getting covered under reverse charge mechanism. This supply is getting covered under reverse charge mechanism. Now, what will happen is, if the supplier is also a registered person, if the supplier is also a registered person, he will only give the tax invoice. He will only give the tax invoice. Now, recipient is liable to pay the GST under reverse charge mechanism. No, what is time of supply? In that case, date of payment, date on which you have made the payment, or 61st day from the date of issuance of invoice by the supplier. The supplier has given you invoice, no? On this invoice, some date will be there, right? So from that day, 61st day, you calculate 61st day from the date of issuance of the invoice by the supplier, whichever is earlier. Okay. Now, 31 subsection 3 clause F, in section 31 subsection 3 clause F, they say one point here. Let us say you are a recipient receiving a supply under reverse charge mechanism, but your supplier has not given you invoice. Let us say your supplier is an unregistered person. He did not give you any tax invoice. In that case, the recipient will be required to do a self-invoicing. The recipient will be required to do self-invoicing. He himself has to generate one self-invoice under 31 subsection 3 clause F. Once again, remember carefully, this is very important. It will have so much of significance. So in case of supply of goods or services under reverse charge mechanism, if the supplier is already registered person, supplier will give tax invoice. But 31 subsection 3 clause F says that in case if you are a recipient who is receiving the supply under reverse charge mechanism, but if your supplier is unregistered person, he will not give any tax invoice. In that cases, the recipient himself has to do self-invoicing under 31 subsection 3 clause F. Okay, so let us say in this case, if the supplier has not given you invoice, in that case, what will be the time of supply is earlier of date of payment. earlier of date of payment. But here 61st day from the date of issuance of invoice by the supplier will not become applicable here. Why? Because supplier did not give invoice. So in that case, what the act is saying, in that case, date of issuance of invoice by the recipient. So in that case, if the supplier is not giving the invoice, this recipient will give the issuance of invoice. No. So date of issuance of invoice by recipient. That means I will say date of issue of self invoicing, whichever is earlier, that will become the time of supply. Okay, so practically speaking, even though they have given 3 dates, but at any point of time only 2 dates will be, you have to compare. In case if the supplier has given invoice, date of payment or date 61st day from the date of issuance of invoice by the supplier. In case supplier has not given invoice, date of payment or date of issuance of self invoicing by the recipient, whichever is earlier. Able to understand? So out of all the provisions of this time of supply, 13 subsection 3 I will consider it as very, very important. Here they can twist, pose a MCQ question and all. So like this you have to remember it. I hope this example will help you out in remembering the concept. So very simple. In case of supply of services under reverse charge mechanism, if the supplier has given invoice, date of payment or 61st day from the date of issuance of invoice by the supplier. In case if the supplier has not given the invoice, date of payment or date of issuance of the self invoicing by the recipient, whichever is earlier. In case of 12 subsection 3, but in case of 12 subsection 3, all that discussion we don't have. In the 12 subsection 3, they have given us 3 dates, whichever is earlier. So what is that? What is that they have told? So they have simply told 3 dates which are required to be compared. In case of 12 subsection 3 is going to be this: date of payment, 31st day from the date of issuance of the invoice, and date of receipt of the goods. Like that they have told under 12 subsection 3. So whichever is earlier. Okay. Right. So this is what regarding 12 subsection 3, 13 subsection 3. So there is one more point regarding 13 subsection 3 also. In case, if you are unable to determine, if it is not possible to determine the time of supply using the above parameters, let us say you are receiving the supply of services under reverse charge mechanism, but you are unable to determine the time of supply as per this. Let us say date of payment is not available, supplier has not given you invoice, let us say recipient has also not given the self invoicing. So if it is not possible to determine the time of supply using the above parameters, it will be the date of entry of service in the books of accounts of the recipient. Same like supply of goods only. So whatever they have told in supply of goods, the same thing they are saying. If it is not possible to determine, in goods they have told the date of entry of goods in the recipient's books of accounts. In case of service also they are saying the same thing. The date of entry of service in the books of accounts of the recipient will be considered as time of supply. Understood? Clear and comfortable? Right. Now, one more small point I would like to explain it here. One more small point. So till 13 subsection 3 we have covered. Now, here in the forward charge mechanism, in 13 subsection 2, one point is relevant that I would like to bring it to your attention. See, they told that what is the time of supply in case of supply of services under forward charge mechanism? If invoice is issued within the time limit, date of invoice or date of payment, whichever is earlier, no? In case if invoice is not issued within the time limit, date of provision of service or date of payment, whichever is earlier. This is what they are saying. Now they have given one relaxation. If you are receiving an advance payment up to 1000 rupees, in case if you are receiving an advance payment up to 1000 rupees. So when I say advance payment, date of payment will always be earlier, no? So in case if you have received the advance, going by the rule of 13 subsection 2, the date of advance payment means you are receiving the advance well before the provision of service. So always date of receipt of payment will be earlier. So that means in case of supply of services, if you are receiving the advance at the time of receiving the supply at the time of receiving the advance only, you become liable to pay the amount of GST. But they have given one relaxation. Okay, you are receiving the advance, but if the advance amount is up to 1000 rupees, if the advance amount which you are receiving is up to 1000 rupees, you can treat date of invoice itself as time of supply. That means you can ignore the date of payment. You need not deposit the tax well in advance. You can consider the date of invoice or date of provision of service. In case if invoice is not issued within the time limit, you can consider either date of invoice or date of provision of service itself as time of supply. When, sir? When you are receiving the advance only up to 1000 rupees. When you are receiving the advance only up to 1000 rupees. In case if you have received the advance for more than 1000 rupees, date of receipt of payment will be earlier. At the time of receipt of the payment only, you become liable to pay the amount of GST. The time of supply will be earlier. But this relaxation has been given only if the amount of advance is up to 1000 rupees. Then only you ignore date of receipt of payment. You can go with the date of invoice or date of provision of service. The same 1000 rupees of limit also will become applicable here also in case of 12 subsection 2, in case of composition dealer, and also specified actionable claims. There also what we have told, whichever is earlier, date of invoice, last date for issuance of invoice, or date of receipt of the payment. So here also if you are receiving advance payment, at that point of time only time of supply will fall. But whatever 1,000 rupees of relaxation they have given, in case if you are receiving the advance up to 1,000 rupees, you can ignore the date of receipt of payment and you can determine the time of supply as per date of invoice or last date for issuance of invoice, whichever is earlier. But this relaxation is there only up to 1,000 rupees of advance payment. Okay, right. So whatever it is, we have covered 12 subsection 1 and 13 subsection 12 and 13 subsection 1, 12 and 13 subsection 2, 12 and 13 subsection 3 we have covered. Now we have 12 subsection 4 and 13 subsection 4 which are actually omitted. We have few more provisions. Here I would like to explain one important circular. Listen carefully. One important circular I am going to explain here. So we have 12 subsection 4 and 13 subsection 4 which used to talk about vouchers. How to determine the time of supply in case of vouchers. How to determine the time of supply in case of supply of vouchers for goods or supply of vouchers related to services. But this 12 subsection 4 and 13 subsection 4 has been omitted. 12 subsection 4 and 13 subsection 4 has been omitted. So now you are not required to determine any time of supply regarding vouchers, because when you are making supply of vouchers, that is not falling under supply definition at all. So department has given one circular, CBIC has given one circular in which they have given a clarification that vouchers are not supply. Whenever you are dealing in vouchers, that is not a supply at all. Sir, what is this voucher first of all? Listen, this circular is very important. This circular related details, theory, you will be able to find it in the supply chapter. In the supply chapter, if you open it, you will be able to find one vouchers related discussion that I am trying to explain it here because this is a relevant place. See, vouchers can be of two types. Vouchers can be of two types. See, vouchers can be something called prepaid instruments. I will simply call them as PPI. There will be some vouchers which are prepaid instruments. There will be some vouchers which are other than prepaid instruments. There will be some vouchers which are other than prepaid instruments. I will give you one simple example to make you understand. Let us say, for example, you have an Amazon voucher. You have an Amazon voucher. So let us say 1,000 rupees of voucher. Amazon voucher is there. That Amazon, you purchased a voucher from the Amazon. Amazon sold you 1,000 rupees of voucher. You paid 1,000 rupees and they gave you the voucher. Now this 1,000 rupees of voucher, you can add it to Amazon Pay balance. Amazon Pay, like that you have something, no, wallet is there, no. So to that Amazon Pay, you can add that money, 1,000 rupees you can add. And once you add that voucher amount of 1,000 rupees to the Amazon Pay balance, you can use it equal to money. You can use it equal to money. So if the amount is lying in your Amazon Pay balance, you can use it equal to money. So for example, if you are placing an order in an Amazon, that you can use it for making payment. And if you are making purchase on any other website, there also they will give you an option to make the payment through Amazon Pay. If you go to any counter, if you go to any shop, if you make any purchase there, if you want to make UPI payment, you can scan using the Amazon Pay, and through that wallet, through the balance which is available in the Amazon Pay, you can make the payment. Yes or no? So here Amazon voucher is similar to cash, is equal to cash. If they have sold you Amazon voucher, that money you have added to your wallet. So that will be equal to money that you can use it for the purpose of settlement of your obligations, equal to money. So yes or no? So that I call it as prepaid instrument. So here Amazon voucher is a prepaid instrument here. So they have told that this, when vouchers are prepaid instruments, they are considered equal to money. They will fall under money definition. They will fall under money definition. Sir, why money definition? Sir, what is the meaning of the term money? Money definition, if you remember, which we have understood in the supply chapter, money means Indian legal tender money or foreign currency or any other instrument which is recognized by RBI which can be used for the settlement of obligation. Yes or no? So any other kind of instrument which is recognized by RBI for the settlement of obligation, that we call it as money. So here, this Amazon voucher, that money which you are adding it to your wallet, that you are using it for settling an obligation. So that will become money here. So that is what voucher meaning. That is what the prepaid instrument here. So if any voucher is supplied, but if it is falling under PPI, if it is a prepaid instrument, that will fall under money definition. So if it is falling under money definition, that is neither goods nor services. If it is falling under money definition, that is neither goods nor services. So if there is no goods and services only, there is no supply at all. There is no supply at all, and there will be no GST. If it is not a supply, there is no GST at all. There is no question of GST at all here. Able to understand? Clear and comfortable? So one part I have explained. So in case voucher is getting qualified as prepaid instrument, then it will fall under money definition. If it is falling under money definition, it is neither goods nor services. If it is neither goods nor services, then it will not be a supply only. If it is not a supply, there is no question of GST only here. Understood? Next. There will be some vouchers which are other than prepaid instruments. There will be some vouchers which are other than prepaid instruments. I will give you one best example, which I often use it in the class. So let us say there is a company called Sleepwell. This company Sleepwell is selling mattresses, office chairs, like that. A set of furnitures they are selling, office furniture, and also some beds, mattresses, and all they are selling. So on the Sleepwell, this Sleepwell website, through the website, they have sold me one voucher. Let us say, for example, they sold me 5,000 rupees of voucher. I purchased 5,000 rupees of voucher from the Sleepwell company. Now, this voucher is not equal to money. This voucher will not be accepted as this voucher will not be accepted for settlement of any obligation. Then what is this voucher, sir? This voucher is just a this voucher can be used for settling your obligation only with the Sleepwell. Let us say if you go to the Sleepwell, if you are buying any furniture, let us say I purchased one office chair amounting to 5,000 rupees. Instead of making that payment, I can redeem that voucher. But this 5,000 rupees of voucher, I can't use it for any other obligation. Let us say if I go to some other furniture store, if I buy the furniture there and if I give them that 5,000 rupees of voucher of Sleepwell, they will give me a tight slap. Yes or no? So this voucher, I can use it only for buying a furniture, that too with the Sleepwell company. Yes or no? So here, this Sleepwell voucher is not a prepaid instrument. It is not a prepaid instrument because it is not getting used as settlement of any kind of obligation. So here, this Sleepwell voucher is other than prepaid instrument. So, however, even though it is other than prepaid instrument, the circular has clarified that if it is other than prepaid instrument, then it will fall under actionable claim definition. If it is other than prepaid instrument, it will fall under actionable claim definition. So anyhow, if it is falling under actionable claim definition, we have seen under Schedule 3, only specified actionable claims will be taxable, will be treated as supply. Other than specified actionable claims, if any other actionable claim is supplied, it is neither supply of goods, not even supply of services. There are only 6 specified actionable claims. What are they? Lottery, betting, gambling, casino, horse racing, online money gaming. That's all. So now, voucher, it is an other than prepaid instrument, but they are saying it is an actionable claim, but it is not a specified actionable claim. It is not a specified actionable claim. No. So if it is not a specified actionable claim, then it will fall under Schedule 3. If it is falling under Schedule 3, once again, it is not falling under supply definition. And here also, there is no question of GST being imposed here. There is no question of GST at all. Able to understand? So this is what the circular has clarified. So in case of supply of vouchers, that voucher will either fall under prepaid instrument or that voucher will not be a prepaid instrument. If the voucher is a prepaid instrument, then it will be equal to money. If it is money, it is neither goods nor services. Then there is no question of invoking the supply here. There is no GST applicable here. On the other hand, if the voucher is other than prepaid instrument, if there is a supply of voucher, but that voucher is other than prepaid instrument like Sleepwell voucher and all, but here it will fall under actionable claim. Even though it is an actionable claim, it will not fall under any of that 6 actionable claims. It will not fall under any of that 6 actionable claims like lottery, betting, gambling, horse racing, online money gaming, etc., casinos. So it is not falling under any of the 6 specified actionable claim. It is other than a specified actionable claim. It will not be a supply. And if it is not, as per Schedule 3, if it is not supply, there is no question of GST being imposed here. Clear? So that's why, because of that circular, when you are making supply of vouchers, it is not at all falling under supply definition only. If it is not falling under supply definition, then what is the purpose of having 12 subsection 4 and 13 subsection 4? Able to understand? If the voucher supply is not at all falling under supply definition, then what is the purpose of having the time of supply provisions related to voucher? See, before the circular, whatever I have explained, this explanation was given in the circular. Before this circular, vouchers are used to be treated as supply. When vouchers are treated as supply, how to determine time of supply? We used to come and refer to that 12 subsection 4 and 13 subsection 4. But now, because of the circular, vouchers are not at all getting clarified. Vouchers are not at all getting qualified as supply. If there is no supply at all, there is no question of having the provisions relating to 12 subsection 4 and 13 subsection 4. That's why they have omitted it. So this 12 subsection 4 and 13 subsection 4 is no longer applicable. Okay, next. Let us come to the next part here. So that also we are done. Now we will come to 12 subsection 5 and 13 subsection 5. Sir, what is 12 subsection 5 talking about? What is 13 subsection 5 talking about? First, we will come to 12 subsection 5. So here vouchers I have given, but it is omitted. I made you strike it off in our class also. In our regular class also, I asked you to strike it off. 12 subsection 4, 13 subsection 4, both you have to strike it off. These are omitted now. This is used to be the provision previously. Right. So 12 subsection 5. Time of supply in residual cases. The same provision exactly copy pasted will be in 13 subsection 5. If you are learning 12 subsection 5, automatically you are learning 13 subsection 5. You are learning 12 subsection 5, you are automatically learning 13 subsection 5. Both are same. So in case of residual cases, sir, what will be residual cases here? Residual cases, usually what will come is when you are caught. when you are not maintaining records, when you are liable for registration but you did not take the registration, on inquiry inspection they have found out that you are required to pay the amount of tax, but you will not fall under any of the 12 subsection 3, 12 subsection 2, 12 subsection 4, etc. So in those cases it will fall under residual cases. Same 13 subsection 5 in case of supply of services, time of supply in case of residual cases. The provision is going to be same here in all the residual cases. That means if the situation is not covered by any of the provisions discussed above, then the time of supply will be fixed under 12 subsection 5. In case of supply of services, it will be fixed under 13 subsection 5 in the following manner. What is it? So time of supply will be either due date for filing of periodical return. If you are already registered person, due date of filing of the periodical return will become the time of supply. In any other case, the date on which GST is paid, the date on which you are caught and on which you are making the payment of GST, that will become the time of supply. So very simple. In all residual cases, one simple rule they are saying: if the return is required to be filed, due date of the return. In all other cases, date on which GST has been paid, that will become the time of supply. Then we have 12 subsection 6. This is also same. If we are reading 12 subsection 6, automatically we are reading 13 subsection 6. Why? Because exactly copy pasted provisions are available. So what is it? Time of supply in case of enhancement is value on account of interest or late fee, etc. for delayed payment of consideration. So what they are trying to say it here. So 12 subsection 5, 13 subsection 5 we have covered. So both are talking about residual cases. Both are talking about residual cases, same provision. So now 12 subsection 6, 13 subsection 6 we have. So both are talking about what is the time of supply in case of enhancement of value. Enhancement of value because of delayed payment. Sir, what is it? Let us say, for example, you are a supplier, you made some supply amounting to 1 lakh rupees along with 18,000 rupees of GST to a recipient. This supply you have made it on 1st of April 2026. On this date you have made a supply. So now you have given 3 months of credit period. You have given 3 months of credit period with the condition that, sir, I'm making the sale on credit basis. You are required to make the payment within 3 months. In case if you are not making the payment within 3 months, I will be collecting from you extra 10,000 rupees interest. Extra 10,000 rupees of interest I will be collecting it from you. Like that I have told. Sir, I made you supply amounting to 1 lakh rupees with a GST amounting to 18,000, but I am giving you 3 months of credit period. If you are not coming back and making the payment within 3 months, you will be liable to pay me 10,000 rupees of interest. Okay, I have initially given the tax invoice. Within 3 months, that person did not come and make me the payment. Within 3 months, this person did not come and make me the payment. Then I am required to collect the interest now. So for this interest, I will give debit note. Since I have to collect extra, I will give debit note. Sir, even on this interest also I am required to collect GST? Yes. Even on this interest also I am required to collect GST? Yes. This I am going to tell you in value of supply. Next chapter which we are going to pick up is going to be value of supply chapter. There I will tell you this. But on this 10,000 rupees also you will be liable to pay interest. For that you will give debit note. Let us say on this 10,000 rupees you are calculating 1800 rupees of GST also. Sir, when you are required to pay this GST on interest, you are getting enhancement in value. What is the time of supply? When you will become liable to pay the amount of GST? Whenever you are receiving it. Whenever you are receiving it. So whenever you are receiving that enhancement of value, either in the form of interest, late fee, penalty, whatever name you want to give it, you give it. So whenever you are receiving that enhancement of value, that will become the time of supply. Not the original supply, not the original supply date. So whenever you are actually receiving that enhancement in value, that will become the time of supply. So that's what they try to clarify it here. So Section 12 subsection 6, in case of supply of goods, it states that time of supply for addition in value due to interest, late fee, penalty is whenever the supplier receives the payment. Same exact provision will be there even under 13 subsection 6 also. So in case of supply of services, in case if there is any enhancement in value due to interest, late fee and penalty, the time whenever that supplier is receiving that enhancement of value, that will become the time of supply. So that's all, my dear students. These are all various subsections which are talking about the time of supply. So we have covered section number 12. What is the time of supply in case of supply of the goods? We have covered 13 subsection. Section number 13, the circumstances of supply of services and how to determine the time of supply for that. Now we have one more thing. Section number 14 we have. So let us try to understand section number 14. For this, I have an example for you. So this I will try to use it. Just give me 1 minute. Oh shit. Where is this copy page option? Okay. Section 14, change in rate of tax. Let us try to understand it. Right. Mhm. Let me rearrange it once. Okay. Fine. So let us try to revise quickly section number 14 also. Sir, what is section number 14 talking about? What will happen in case if there is a change in rate of tax? See, in association with supply, there could be 3 dates. In case of supply, there could be 3 dates associated with the supply, whether it is supply of goods or supply of services. There are 3 dates associated with it. One is date of supply, date on which you have made the supply. Other one is date of invoice. Then the next one is date of payment. Date of payment. So if associated with the supply, there might be 3 dates associated. Number one, date of supply, date on which you have made the supply. Then we have date of invoice, date on which you have given the invoice. Then date on which the payment has happened. So 3 dates will be there. Now between these 3 dates, there might be a change in rate of tax which could happen. Between these 3 dates, there could be a change in rate of tax. That means you are making some supply, the rate has been changed from certain percentage to some another percentage. So like that, rate changes could happen between these 3 dates. In those cases, how to determine the time of supply? See, one recent example I will tell you. Recently we had this GST 2.0 reforms. As a part of that GST 2.0 reforms, there was a change in rate of tax. Many items there was a change in the rate of tax. So let us say, for example, there is a change in rate of tax. You are supplying one product. So that product before 22nd of September 2025, the rate of GST is 12%. But with effect from 22nd of September 2025, the GST rate has been changed to 18%. So before 22nd of September 2025, you are making supply of one product. Before 22nd of September, the rate of GST was 12%, but with effect from 22nd of September 2025, as a part of the GST 2.0 reforms, so they have increased the rate of GST from 12% to 18%. So like that, there is a change in rate of tax. See, if all the three are happening prior, let us say if the date of supply and date of invoice and date of payment, if all the three are happening before 22nd of September, no need to worry. We will go by the usual rules of 12 and 13. If all the three are happening after, let us say date of supply, date of invoice, date of payment, if all the three are happening after, then also we'll go by rules of section number 12 and section number 13. But when the problem will happen is, a few dates are happening among these three, if you are happening before, if you are happening after, then the problem will arise. Then we have to come to section number 14. So if there is a change in rate of tax and 3 dates are there, date of supply, date of invoice, date of payment, if all the three are happening at one point of time, then there is no issue. We will go to section number 12 and section number 13. But in case there is a change in rate of tax, but between date of supply, date of invoice, date of payment, some dates are before, some dates are after, then how to determine the time of supply? So here we have two sections, 14 subsection A and 14 subsection B. So 14 subsection A says that, let us say there is a change in rate of tax, but date of supply has taken place before the change in rate of tax. Supply has taken place before the change in rate of tax. Then what will be the rate and time of supply which will be applicable? Then which rate will become applicable? What will be time of supply? And we have 14 subsection B, there is a change in rate of tax, but date of supply has taken place after the change in rate of tax. Then how to determine the time of supply? That is covered under 14 subsection B. Okay, so 14 clause A, which is talking about in case if the date of supply has taken place before the change in rate of tax, how to determine time of supply and what will be the rate applicable. Then 14 subsection B, if supply is happening after the change in rate of tax, what will be the time of supply, what will be the rate? First I will talk about 14 subsection A. So let us say in 14 subsection A, one thing is common, supply has taken place before the change in rate of tax. So date of supply is before the change in rate of tax, but let us say that date of invoice and date of payment both have happened after the change in rate of tax. Supply has taken place before the change in rate of tax. You would have done the supply. Let us say, for example, you have supplied already the goods or services when the rate of tax is 12%. But date of payment, both is happening after the change in rate of tax. So then what will be the time of supply? Which rate will be applicable? They say time of supply will be date of invoice and date of payment, whichever is earlier. Date of invoice and date of payment, whichever is earlier, that will become time of supply. And whatever rate that is there as on that particular date, whichever is earlier, that will become the rate which is applicable. Since both are after change only, Since both are after change, let me give you some illustrative examples here. Let us say date of invoice is 28th of September. Date of payment is 30th of September. Which one is earlier? Date of invoice. So time of supply will be date of invoice, and whatever rate which is applicable on date of invoice. What is the rate applicable? 18%. So even supply also will attract 18% GST. Understood? So one more typical scenario which could happen is, sir, supply has taken place earlier. Supply has taken place before only. Invoice is also issued before. Invoice is also issued before change in rate of tax, but payment has happened after the change in rate of taxes, sir. Supply has taken place before change in rate of tax. Date of invoice is also before change in rate of tax, but payment has happened, sir, after change in rate of tax. Then what will be time of supply and which rate will be applicable? They simply say that in this case, date of invoice will be considered as time of supply, and whatever rate that is prevailing as on the date of invoice, that rate will become applicable. That means 12% will become applicable here. One more case which could be possible is, sir, supply has happened before only. Date of payment has happened before the change in rate of tax, but invoice was given after the change in rate of tax, sir. So in that case, date of payment will become the time of supply, and the previous rate only will be applicable. 12% only will become applicable. So this is what 14 subsection A says. If I have to summarize all of this into one single line, in case of 14 subsection A, sir, what is 14 subsection A? There is a change in rate of tax, but supply has taken place before the change in rate of tax. Simply, if I have to put it, time of supply and rate applicability will be date of invoice or date of payment, whichever is earlier. That's what the simple summary. That's what the simple summary. If you apply this logic, that will become applicable in all this first case. So in case of change in rate of tax, and if the date of supply has taken place earlier, before the change in rate of tax only date of supply has taken place, but remaining dates are spread, then what you should do? Simply, if I have to put it, time of supply and the rate will be applicable, rate applicability will be the date of invoice or date of payment, whichever is earlier. That's what happening here in all the circumstances. Then 14 subsection B. What is 14 subsection B says is, sir, there is a change in rate of tax. Supply has taken place after, sir. Supply has taken place after the change in rate of tax, but date of invoice and date of payment are happening before or spread. Then what we should do? So here they say that in case if the supply has taken place after, but date of payment, date of invoice, both are before change in rate of tax. You made the supply after the change in rate of tax, but date of payment and date of invoice both are before change in rate of tax. Now whichever is earlier, date of payment or date of invoice, whichever is earlier, that will become the time of supply, and that old rate will become applicable. Sir, date of supply is after the change in rate of tax. Date of payment is also after the change in rate of tax, but invoice alone I have given before change in rate of tax, sir. In that case, go with the date of payment. So date of payment will become the time of supply. Whatever rate that is prevailing on the date of payment, that rate will become applicable. Sir, date of supply is later, sir. Invoice also I have given later, sir, but payment has happened prior to that, sir. In that case, take date of invoice, that will become the time of supply, and that rate will become applicable. So if I have to summarize this entire 14 subsection B into one simple paragraph, so time of supply and rate applicability will be as follows. And when 14B will become applicable? 14B will become applicable when the date of supply is after the change in rate of tax. So in case if the date of invoice or date of payment, whichever is later, general rule is a date of invoice or date of payment, whichever is later. But in case if the both have happened before change in rate of tax, if date of invoice and date of payment are before the date of change in rate of tax, whichever is earlier, so that will become the time of supply and the rate, and that rate will become applicable. Understood? So if you are able to remember the logic, go with the logic. If you are finding difficult in remembering the logic, just you try to remember this one single line summary. One single line summary is whatever I have given, that you can remember it as a thumb rule. If you are able to remember the logic and all, go with the logic. If you are unable to remember the logic, just simply try to remember this one line summary is whatever I have given it here. Understood? That's all. So this is what regarding the time of supply chapter, my dear students. So with this, I am winding up the revision of time of supply. So with this, I am winding up the revision relating to time of supply chapter. So now what we will try to do is we will try to proceed further with the value of supply chapter. We will try to proceed further with the value of supply chapter. Important chapter we are going to revise now. Listen carefully. Someone is asking, why do you not teach in Hindi? I can't, because from the beginning itself, I was so adopted to teaching in English. Now it becomes highly difficult if I have to teach in Hindi. It's not something that I could not speak. Yes, I could speak Hindi comfortably, but I can't teach in Hindi. because I have adopted. So I thought my teaching should be benefited for all the students, not for one particular language. So just I had that intention from the beginning itself. So that's why I adopted my teaching completely in English, and I will teach in English. That's it. Fine. So one more message I was able to see it in the chat box. Sir, marathon chart. I will upload it. Don't worry, because see, many changes I'm going to do it. So this running notes and all, whatever I'm using, where I'm keeping all the charts and all, this I will upload it. Let me complete the marathon series. I will make it available on the website in the free resources section. I will make it available. Right. Fine. So let me try to proceed further. So now we will talk about the value of the supply chapter. Very important chapter. There will be a compulsory question from this value of supply chapter. Listen carefully. Once again, if you remember the introduction part, once again, if you go to the introduction part, I have already told you what is the significance of this value of supply chapter. So if you remember the structure of GST, first there must be goods or services, and a taxable event called supply should have taken place, right? And a taxable event called supply should have taken place. That supply should be falling under taxable supply, and that supply should be made by taxable person. Then only GST will be applicable. So once that GST will become applicable, now you have to calculate the amount of GST. You have to calculate the amount of GST which is required to be paid, or if you are a supplier, the amount of GST which is required to be collected. Okay. Then thereafter, how to calculate that amount of GST, sir? The question will come. Okay, I'm a taxable person. I am making a taxable supply. Now I have to collect the amount of GST, sir. But how to calculate that amount of GST? So GST is always an ad valorem. Customs, if you have listened to the classes of customs could be ad valorem or it could be specific duty. But GST is always ad valorem. Sir, what is ad valorem? So there will be 1%, one rate of GST that will be given. That rate is required to be multiplied with the value. So you have to determine the value of supply, and there will be a rate given. That rate of GST is required to be multiplied with the value. By that you are going to arrive at the GST amount. So GST is an ad valorem taxation. Now the $1 million question is, sir, how to determine that value of supply? How to determine that value of supply? So how to determine that value of supply, that they have tried to explain it in section number 15. So section number 15 of the CGST Act is going to help us out in arriving at the value of the supply. How to arrive at the value of the supply, that 15 subsection 5 is trying to help out. Section number 15 of the CGST Act is going to help us out in determining what is value of supply. So let me give you overall structure now, how to determine the value of supply. What is the structure of section number 15? We'll try to understand. So we have 5 subsections: 15 subsection 1, 15 subsection 2, 15 subsection 3, 15 subsection 4, and then we have 15 subsection 5. See, understanding this structure of section number 15 is very, very important, because that will add more conceptual clarity. So section number 15 is divided into 5 subsections. What does each subsection say? 15 subsection 1 says that, let me come to the material now. Right. So 15 subsection 1. So what does 15 subsection 1 says? If I keep it in very simple form, whenever a supply is happening between two unrelated persons, and when price is the sole consideration. So whenever a transaction is happening between two unrelated persons, the people are the buyer, the supplier, and recipient, both are not related with each other. So a transaction is happening between two unrelated persons, and price is the only consideration. Whatever monetary amount you are charging, that is the only consideration. Apart from price, there is no other consideration. So if that is the case, 15 subsection 1 says that you can start with transaction value. Transaction value will be considered as value of supply. You can start with transaction value. Sir, what is transaction value? Transaction value means the value at which the transaction has taken place. If I have to put it in very simple English. So what is transaction value? The value at which the transaction has taken place. Or if I have to go to the technical definition, they say that transaction value means price paid or agreed to be paid in relation to the supply. Whatever price that has actually been paid, or whatever price that is agreed to be paid in relation to the supply, that I call it as a transaction value. So what they're trying to say here is, if the transaction is happening between two unrelated persons and price is the sole consideration, then whatever value at which the transaction has taken place, whatever price that has been paid or agreed to be paid in relation to that supply, that you start with it. That will be considered as value of supply. Clear? That's what 15 subsection 1 says. Then, so 15 subsection 2 says that whatever value of supply you have taken, whatever transaction value you have taken, in order to arrive at the transaction value, you are required to do some additions. In order to arrive at the transaction value. In order to arrive at the value of supply, sorry. So whatever transaction value you have taken, as per 15 subsection 1, you have taken the transaction value, no? To that transaction value, you are required to do some additions. When you do all that additions, then you will arrive at the value of supply. On that value of supply, you are required to calculate the amount of GST. And it says that under 15 subsection 2, there are 5 kinds of items they are saying. 15 subsection 2, clause A, clause B, clause C, clause D, clause E. All together 5 items they have told. You have to add these 5 items. Under 15 subsection 2, you are required to add this 5. You are required to do this 5 additions to the transaction value to arrive at the value of supply. Okay, so this is what 15 subsection 2 says. Now 15 subsection 3 says, okay, transaction value is there, fine. Thereafter, you have made the additions under 15 subsection 2. All the additions you have done. Okay. Now, from that value, you have to do some adjustments for discounts. Some discounts are required to be reduced. So that discounts you reduce it, then you will ultimately arrive at the transaction value. On that transaction value, you calculate that, you apply that rate of GST, you will ultimately arrive at the amount of GST applicable for that supply transaction. Understood? So here the discount related treatment is explained under 15 subsection 3. Okay. So 15 subsection 1 says, once again, if you come back to the logic here, 15 subsection 1 says, when the transaction is happening between two unrelated persons and when price is the sole consideration, then we can take the transaction value as a value of supply. We can start with the transaction value. Now, 15 subsection 2 says, whatever transaction value you have taken as per 15 subsection 1, then to that transaction value, you are required to make some additions. You are required to do some additions. 15 subsection 2, clause A, clause B, clause C, clause D, clause E, like that, 5 additions you are required to do. Now 15 subsection 3 says that, okay, you have taken transaction value, you have also done the additions as per 15 subsection 2, clause A to E. To that, you have to make some adjustments for discounts. As a common business practice, we give discounts. In business, discounts are very common. So there will be 2 kinds of discounts. One is pre-supply discount, other one is called post-supply discount. So they will tell you treatment, how to treat the pre-supply discount, how to treat the post-supply discount. That is what we are going to learn in 15 subsection 3. So you're required to make some adjustments to the transaction value with respect to the discounts. How to do it, that guidance has been given under 15 subsection 3. So that discount value, you have to reduce it from the transaction value. Then finally, you will arrive at the value. On that value, you multiply the rate of GST which is applicable. Then you will be able to calculate the GST amount. Till here, you are able to understand. So 15 subsection 1, 15 subsection 2, 15 subsection 3, all these 3 are connected. So these 3 subsections will become applicable in relation to those supplies where the supply is happening between 2 unrelated persons and where price is the sole consideration. 15 subsection 2, 15 subsection 1, 15 subsection 2, 15 subsection 3, all this cluster is related. So these 3 are talking about only one case. Which case? Where the supply is happening between unrelated persons and where price is the sole consideration. Then you take the transaction value as a value of supply. To that you do the additions as per 15 subsection 2. From that you reduce the discounts as per 15 subsection 3. Then you will finally arrive at the value of supply. So 15 subsection 1, 15 subsection 2, 15 subsection 3, all the 3 sections are talking about those circumstances where transaction is happening between 2 unrelated persons and where price is the only consideration. Sir, but not all supplies will happen between unrelated persons. In not all supplies, the transaction value will be only, price is the only consideration. There could be other aspects also. Sir, what could be the other aspects? Let us say, for example, there is a supply which is happening between a related person. There is a supply which is happening between related person. See, if the supply is happening between related persons, 15 subsection 1, will it become applicable? No, 15 subsection 1 will not become applicable. 15 subsection 1 will not become applicable. So then how to determine value of supply, sir? You come to 15 subsection 4. In 15 subsection 4, they have prescribed some rules. In 15 subsection 4, they have prescribed some rules. Rule number 27, 28, 29, 30, 31, 32, 33. So like that, some rules they have prescribed under 15 subsection 4. According to that prescribed rules, you have to determine the value. When, sir? Whenever the supply is happening between related persons, then you can't come to 15 subsection 1. Transaction value will not become applicable. Transaction value will not be accepted. They have given some rules. Some rules are prescribed under 15 subsection 4. According to that rules, you have to determine the value of supply. Clear? Another case. Sir, let us say supply is happening between related persons, unrelated persons only. Supply is happening between unrelated persons only. But the problem is the price is not the sole consideration. The price is not the sole consideration. Sir, what do you mean by price is not sole consideration? That means you are not just getting monetary consideration, even some non-monetary consideration is also involved. So when I say price is not the sole consideration, it could be partly monetary. It could be partly monetary and partly non-monetary. Partly monetary and partly non-monetary. Let us say exchange transaction, mobile exchange. So you go and buy a new mobile phone for which you will exchange your old mobile phone. You are giving an old mobile phone, along with that some amount also you will pay. Let us say I am buying a new iPhone in which I am giving my old iPhone and also I am paying some 30,000. So this is such a transaction where consideration is partly in money. Consideration is not partly in money because they are receiving an old mobile phone. That is partly a non-monetary transaction. So in that case, sir, will 15 subsection 1 will become applicable? No. Why? Because 15 subsection 1 will become applicable only when the supply is happening between two unrelated persons and price is the sole consideration. Here price is not the sole consideration because partly non-monetary consideration is involved. So you can't bring here 15 subsection 1. You can't go by the transaction value. Then how to determine the value, sir? You come to 15 subsection 4. In the 15 subsection 4, some rules are prescribed. Once again, rule 27, 28, 29, 30, 31, 32, 33. So like that, some rules are prescribed. According to that rules, you have to determine the value of supply. You have to determine the value of supply. Sir, I am doing a transaction with unrelated person only, but the transaction is completely non-monetary consideration, sir. There is no monetary transaction involved. It is completely non-monetary consideration. Let us say, for example, complete barter transaction. I am making some supply of goods. In return, I am getting the supply of the goods. No money, nothing involved. I am making some supply of services. In return, I am getting some supply of services. Or I am making supply of goods. In return, I am getting services. So like that, complete barter transaction is there. Unrelated person only. Supplier and recipient both are unrelated persons only, but the price is not the sole consideration. When I say price is not the sole consideration, it could be a partly monetary, partly non-monetary, or it could be a completely non-monetary consideration also. In that case also, will 15 subsection 1 will become applicable? No, sir. What will become applicable? 15 subsection 4. Once again, some rules are prescribed under 15 subsection 4. According to that prescribed rules, you determine the value of supply, and on that value of supply, you are required to calculate the amount of GST. Understood? So this is what 15 subsection 4 says. So 15 subsection 1 I have explained, 15 subsection 2 I have explained, 15 subsection 3 I am to explain, and 15 subsection 4, if you see, if I read it for you, where the value of supply of goods or services or both cannot be determined under subsection 1. Sir, when you can't apply subsection 1, when the transaction is happening between two related persons and price is not the sole consideration, then 15 subsection 1 will not become applicable. That's what I tried to give you in the form of chat also, when 15 subsection 1 will not become applicable. Next. So in case value of supply cannot be determined under subsection 1, then the same shall be determined in such manner as may be prescribed. They are prescribing some rules, rule 27 to 31 of the CGST rules. According to that rules, you have to determine the value of supply. Next. Sir, what is 15 subsection 5? Okay, you have explained us 15 subsection 1, 15 subsection 2, 15 subsection 3, 15 subsection 4. Now what is 15 subsection 5? Let us try to read this also, what they say here. Notwithstanding anything contained in subsection 1 or 4. That means it is having an overriding effect. 15 subsection 5 is having an overriding effect of 15 subsection 1 and 15 subsection 4. It will override both the sections. Value of such supplies as may be notified by the government. That means government can notify some supplies on the recommendations of the GST Council. So whatever services, whatever supplies which are notified by the government on the recommendations of the council, their value shall be determined in such manner as may be prescribed. That means government will prescribe some services and government will notify some services. For that services which have been notified, the valuation has to be done as per specific rules only. That means even though the transaction is between unrelated person, price is the sole consideration, 15 subsection 1 will not become applicable when they have notified some supply. For that notified supply, 15 subsection 1 will not become applicable. They will give you some rules. According to that rules only, they have to determine the value of supply. Understood? So like that, government can notify some supplies on the recommendations of the council, for which they can give you different rules for valuation. For those notified supplies, the valuation must be done according to that different rules only, not 15 subsection 1 or 15 subsection 4. This will have a overriding effect. And there are various bunch of services which are actually notified here, the list which we are going to cover in the subsequent chapter. If I give you a few examples, sir, what services are notified under 15 subsection 5? Like purchase or sale of foreign currency, booking of air tickets, life insurance services, buying and selling of second-hand goods, vouchers, tokens, coupons or stamps, services provided without consideration, Supply in case of lottery, betting, gambling, online money gaming other than online money gaming, actionable claims in casinos. So like that, list of some services have been notified for which they are prescribing separate rules. According to that rules, we have to determine the value of supply. Understood? Clear? Right. So I gave you the entire structure of 15 subsection, entire section number 15. Now let us try to first complete this block. 15 subsection 1, subsection 2, subsection 3. This block we will try to complete first. 4 and 5, that rules will come back to that later. So 15 subsection 1, 2 and 3, when it will become applicable? When the supply is happening between two unrelated persons and price is the sole consideration. So then 15 subsection 1, 2 and 3 will become applicable. So 1 I have already covered. So what does 1 say? 15 subsection 1 simply says that transaction value itself will be taken as value of supply. Sir, what is transaction value? Transaction value is nothing but the value at which the transaction has taken place, or even if I have to put it in simple terms, the price which is paid or agreed to be paid. So what is transaction value? When a transaction of supply of goods or services is made between two persons who are not related to each other and price is the sole consideration, it should be transaction value. Sir, what is transaction value? It includes both amount already paid and payable. Whatever amount paid or payable in relation to that supply, that we call it as transaction value. Okay, sir, we'll take the transaction value. Now you are saying we are required to do some additions. We are required to do some additions to this transaction value. You are required to do some additions as per 15 subsection 2. So there are 5 clauses are there. So these are 5 additions I am required to do. Let us try to understand what are those 5 items which are required to be added to the transaction value under 15 subsection 1. Starting with 15 subsection 2 clause A, which says that in addition to the transaction value, if the supplier is collecting from you any extra amount in the form of taxes, duties, cess, fees and any other charges levied under any law for the time being in force, other than CGST, SGST, UTGST and GST compensation cess, if these charges are getting separately collected by the supplier. So supplier is making some supply. He's saying that for this supply the value is 10,000 rupees. In addition to that value, he is also collecting some other amount in the name of taxes, cesses, duties or charges under any other law for the time being in force, apart from GST and GST compensation cess. So all those taxes, cesses, charges collected under any law, that should be added to the value of supply. So let us say, for example, if the supplier is collecting from you in the name of municipal taxes some amount, or he's collecting from you some property tax in the name of some tax, or he's collecting you from some cess, water cess or municipality cess, so like that he's collecting some cess. So apart from GST compensation cess, if any excess tax, duties, cess, fee or charges is getting collected by the supplier from the recipient under any other law for the time being in force, that should be added to the value of supply. But one point you have to remember it here, only when the supplier has collected from the recipient, then only you add it. If the supplier is not collecting anything, let us say for example, sometimes in the exam they will try to confuse you. There is a supplier who rented out immobile property to a recipient at a monthly rent of 10,000 rupees. Supplier paid some 1,000 rupees of municipal tax from his own pocket. He did not collect it from the recipient. So sometimes they will try to confuse you on these minute details. Many students will do the mistake. So there is a supplier who has given an immobile property on rent for a monthly rent of 10,000 rupees. Now this supplier is making the payment of municipal taxes of 1,000 rupees to the municipalities, which he is not collecting from the recipient separately. So you tell me here transaction value is 10,000 rupees. Should I add that municipal tax also? No. Why? Because they clearly say here, if charged separately by the supplier, if the supplier is separately charging in addition to the consideration, then only you have to add it to the value of supply. Understood? Now here there is one important clarification which we all have to remember it. So what is that is, let us say for example, you went for car shopping. You went to purchase a car. What is this? Okay. So you want to purchase a car. So you went to one dealer and this dealer has made a supply of car. So when you are purchasing a car exceeding 10 lakh rupees and all, as we all are aware, you will be required to pay consideration. Let us say I am purchasing 15 lakhs worth of car. In addition to that, car dealers will collect from you something called TCS at the rate of 1%. TCS also they will collect on the value of the car which has exceeded 10 lakh rupees and all. In addition to the consideration, they will also collect TCS under Income Tax Act. Let us say 15,000 rupees of TCS they have collected. Now what this dealer will do? Total 15 lakh rupees is the value of supply. In addition to that, some tax, TCS under income tax is also collected. Now the issue which has gone to the department is whether this TCS is also required to be added under 15 subsection 2 clause A. is this TCS also required to be added under 15 subsection 2 clause A? This is what the question which has went before the department. So now the argument here is 15 subsection 2 clause A says all kind of taxes, cesses, charges which are imposed under any other law, if collected separately by the supplier from the recipient, that should be added. So TCS is also getting collected. No, it should also be added to the value of supply. So now what department has clarified is, see, whatever this TCS which is getting collected, that is not in the nature of tax. It is just in the nature of interim levy. This phrases you have to use it in the exam. So whatever TCS which is getting collected, the department has clarified that TCS under income tax is not tax. TCS which is getting collected under income tax is just an interim levy. What is interim levy, sir? This dealer will collect TCS of 15,000 rupees. What he will do to that 15,000 rupees? That 15,000 rupees will be deposited against the PAN number of this buyer. So this person will give PAN, against his PAN number this 15,000 rupees will be deposited. Now this person against whose PAN number the TCS has been deposited, what he can do? He will file his ITR. No, when he is filing ITR, he will have a tax liability. Against that tax liability, that TCS amount will be adjusted. Let us say if this person is filing ITR, if he is having no tax liability, then that TCS amount you can claim it as refund. So either this TCS which you have paid it to the dealer, that amount will be deposited against your own PAN card only, and whatever amount that has been deposited in your against your PAN, the TCS amount deposited against your PAN, you can use it either for discharging your tax liability. In case if you are not having any tax liability, the TCS amount anyhow ultimately you are going to get it as a refund only. No. So that means it is not in the nature of tax. Ultimately, you are only enjoying its benefit. It is just an interim levy. So since the TCS is not in the nature of tax, it is just an interim levy. The department has clarified that this TCS should not be added to the value of supply. Under 15 subsection 2 clause A, TDS should not be added to the TCS should not be added to the value of supply. Why, sir? Why? Because it is not in the nature of tax. It is just an interim levy. Okay, so this circular is very important. Okay, we have covered 15 subsection 2 clause A. First item which is required to be added to the value of supply. Second item which is required to be added to the value of supply. Any amount that the supplier is liable to pay in relation to such a supply, but which has been incurred by the recipient of the supply and which is not included in the price actually paid or payable for the goods or services or both. Sir, what is it? I will simply try to say it as supplier's obligation met by the recipient. Supplier's obligation met by the recipient, that should also be added to the value of supply. Sir, what they are trying to say here, also let me try to use one simple example to make you understand this in a detailed manner. Let us say there is one supplier. He agreed to provide me catering services. So this recipient is undergoing a wedding. So at his wedding, he has received catering services. Now, as a part of this catering service, some 20 items are required to be supplied. This person has agreed to provide catering services. As a part of this catering, some 20 items are required to be supplied. They have to serve 20 kinds of food items. So in that 20 food items, one drink. So soft drinks also they are required to provide. Along with the catering, they are also required to provide soft drinks. Now, when this wedding is happening, on the day when the wedding is happening, at the wedding hall, so one person, this supplier is also required to provide soft drinks, no, as a part of the catering service. So there is one vendor. There is one third party, one vendor is there. So this supplier has ordered from this vendor to deliver some 500 soft drink bottles. So he brought his vehicle with 500 soft drink bottles and he has unloaded that at the wedding venue. At the wedding venue, he has unloaded it. Now he stood there and he's asking for payment. Whom he will ask the payment? For supplier, he will ask the payment. Sir, you asked me to deliver 500 bottles of the soft drinks here. I have unloaded them. Please come and make me the payment. At that point of time, let us say supplier is not available at the venue. He went out on some task. Supplier is not available. So now he's not leaving. Supplier told the vendor, boss, you go now. Later, I will come back and pay you for that 500 bottles. But this vendor is not leaving. This vendor has created the issue there. He's going and asking everybody. He's disturbing the guests and all. He's shouting in big voice and all. So he's creating nuisance. Now, this fellow who is getting married, who is a recipient of that catering service, is worried. He went to that vendor and asked the problem. Boss, what is your problem? He told, sir, that supplier has asked me to deliver 500 bottles of soft drinks here. I have unloaded them, but now he's not giving me payment. I will not go. Now he is creating issue at his wedding. He's getting worried. So what the recipient told is, okay, I will do one thing. Who is required to pay? Supplier is required to pay. No, how much amount you are required? He is required to pay 10,000. Don't worry, I will pay you 10,000. Don't worry, I will pay you 10,000. You please leave from here. So here recipient has paid 10,000 rupees to a third party. Here vendor is a third party, no? So recipient has paid amount of 10,000 rupees to a third party, which is actually whose obligation? Supplier's obligation. So supplier's obligation has been met by the recipient. Recipient has made a payment to the third party, which is actually supplier's obligation in relation to that supply. Now ultimately after this wedding and all has happened, recipient is required to make the payment. No. So what he is doing is, okay, initially we agreed for the fees of 1 lakh rupees, but since I have already made the payment, your obligation I have already discharged it to third party amounting to 10,000, I will pay only 90,000 rupees. So how much he has paid? 90,000 to the supplier. So now you tell me, what is the transaction value here? 90,000 only. Transaction value is 90,000. Why? Because what is transaction value? Price paid or agreed to be paid by the recipient to the supplier. So here how much price he will pay ultimately? 90,000. So transaction value as per 15 subsection 1 is 19,000 only. But under 15 subsection 2 clause B, this 10,000 rupees will be added. Why, sir? Because this 10,000 rupees is an amount paid by recipient to a third party, which is actually supplier's obligation and in relation to such a supply. So supplier's obligation has been met by recipient in relation to the supply. So as per 15 subsection 2 clause B, this 10,000 will be added. Total 1 lakh will become the value of supply. On that 1 lakh rupees, you will be liable to collect the amount of GST. Supplier should charge GST on 1 lakh, not just 90,000 rupees. Able to understand this? I hope you are able to with the help of this example. So that's what they try to say it here. So if you see any amount that supplier is liable to pay in relation to such supply, but which has been incurred by recipient, supplier is liable to pay some amount in relation to the supply, but instead of supplier who incurred that amount, recipient has incurred that amount. So if it is not included in the price actually paid or payable, so you are paying 90,000. In that 90,000 rupees, that 10,000 rupees paid to the third party is not included. Now you have to add it as per 15 subsection 2 clause B. Understood? Clear? Right. Next one. So this is what regarding B. Then we have C. Sir, what is C? In relation to the supply, if any incidental expenses are incurred like commission and packaging, which is charged by the supplier to the recipient of a supply, and any amount charged for anything done by the supplier in respect of the supply of goods or services or both, either at the time of supply or before delivery of that goods, before delivery of the goods or supply of the services. So not just the value of the consideration, any other incidental expenses. Let us say, for example, supplier is collecting from you along with the value. He is also collecting from you some commission, packing charges. So like that, if he is collecting some extra amount, even that also should be added to the value of supply. Or supplier has done something at your request. Supplier has done something at your request. For that, he is charging some extra amount from you, and that activity has been performed either at the time or before delivery of goods or supply of services. Even that is also required to be added. Let us say, for example, you have ordered some goods. Now you ask the supplier, sir, before delivering the goods to me, you please do some testing. You are buying some food articles. Now you wanted the supplier to get some inspection report. So supplier, since you have agreed, okay sir, I will supply the goods amounting to 1 lakh. But since you are asking me to do the testing, I will get the testing done for you. That for testing 10,000 rupees extra. So at your request, supplier is doing something for you and he is collecting that amount separately, 10,000 rupees. Now your value of supply will not be just 1 lakh rupees, it will be 1,10,000 rupees. Able to understand here what they are trying to say? So all other incidental expenses like commission, packaging, which are charged by the supplier from the recipient, that should be added to the value of supply. Or if any amount is charged by the supplier for doing anything in relation to that supply at the request of the recipient, and that you are doing that additional activity which the supplier is doing either at the time or before delivery of the goods or supply of services. In case after the supply of the goods or after supply of services, if the supplier is doing something at the request of the recipient, for that if he is collecting some extra amount, will it be added? No. Only something done by the supplier at the request of the recipient either before or at the time of delivery of the goods or supply of the services. That additional activity should have been done by the supplier either before the delivery of the goods or at the time of delivery of the goods, or before the supply of services or at the time of supply of services, but not after. If anything done extra by the supplier at the request of the recipient after the delivery or supply of the goods or services, then that amount will not be added to the value of supply. It will be taxed separately. Understood? Clear? Now here I want to bring one more concept here. So what is that one more concept is? See, I want to bring here the concept of pure agent. Listen carefully. I am a supplier. Okay. So now I am a supplier. I am making some supply of the goods. Let us say 1 lakh worth of goods I am supplying to the recipient. In addition to that, I am also collecting some incidental expenses. Let us say I am collecting some 10,000 rupees as incidental expenses. Now I told 15 subsection 2 clause B, any incidental expenses should be added to the supply. But here there is one small catch here. In case if you are a supplier, you are collecting that extra expenses in the capacity of a pure agent. In case if you are collecting that incidental expenses or extra expenses you are collecting in the capacity of a pure agent, then that will not be added. In case, in addition to the value of supply, if you are collecting some extra amount for any expenses incurred by the supplier, but in case if you are collecting that extra amount in the capacity of a pure agent, then that pure agent expenses will not be added. That pure agent expenses will not be added. Now a doubt will come to you, sir, what is pure agent or who is pure agent? Let us see what is pure agent, who is pure agent. So if you come to rule number 33, you will be able to find the details. So who is a pure agent? Let us try to understand who is a pure agent. Right. So who is a pure agent? Pure agent means a person who enters into a contract with the recipient to act as their pure agent for incurring expenditure. That means as a supplier, you are entering into a contract with your recipient that you are going to act as a pure agent. And he does not hold the title of goods or services procured. That means on behalf of your recipient, you are procuring some goods, you are procuring some services, and you are not owning any title. Let us say, for example, one simple example I will tell you. I am providing event management services. One person is undergoing his wedding. I agreed to provide him event management services. For that event management, I am collecting 5 lakh rupees. Now, this recipient has requested me, boss, you do one thing, along with the event management, you also book the rooms for my guest in the hotel. You also book the rooms for my guest in some hotel. I told, okay, sir, I will book the rooms for your guest. For that, I will incur some expenses. Let us say, for example, I am incurring some 50,000 rupees expenses. But this is incurring as a pure agent. When he is incurring as a pure agent, when he will be considered as pure agent, he has agreed, he has entered into an agreement with the recipient to act as a pure agent. Number 2, he does not hold title of the goods or services procured. That means whatever hotel bills and all he is getting, those are in the name of the recipient only. Those invoices, that hotel bills and all are not in the name of the supplier. That invoices and all are in the name of the recipient only. Then he does not use the goods or services for their own interest. So he is booking that hotel not for his purposes. He is booking the hotel for recipient's purposes. Receives only actual amount, and this 50,000 is the actual amount you are incurred. You are not adding any profit margin. You are not adding any profit margin. Whatever cost you have incurred, that cost only you are recovering. Receives only actual amount for procuring the goods or services aside from the services provided on their own account. So this 5 lakh rupees is the consideration for services you are providing on your own account. This 50,000 rupees is for booking the hotels at the request of the recipient. You are only recovering the cost. And invoice is also in the name of the recipient. Then you will be considered as pure agent. Sir, should this 50,000, whatever I have extra collected, should that also be added to the value? No, not required. No, not required. So that's what they say here. Expenditure incurred by a pure agent is excluded from the value of supply and aggregate turnover subject to the following conditions. So this 50,000 rupees will be excluded from value of supply. This 50,000 rupees will not be included in the aggregate turnover of the supplier also. But some conditions are required to be fulfilled. Sir, what are that conditions? Payment arises from a contract between recipient and third party. So there should be a contract between recipient and third party with the supplier acting as a pure agent. That means you should this recipient should say to the hotel, sir, on my behalf, there will be a supplier. He will act as a pure agent. He will incur expenses on my behalf. And the recipient authorizes supplier to make the payment. That means recipient has given the approval to make the payment. The supplier shows the payment separately in the invoice. Very important. This excess amount you are collecting should be shown separately. You should not show the bulk amount. If you are showing single amount 5,50,000 rupees, then entire 5,50,000 rupees will be treated as value of supply. If you want to claim that exemption of pure agent expenses, show your value of supply separately and the pure agent expenses separately you have to indicate in the invoice. And the supplier supplies as a pure agent are in addition to their own services. So in addition to your main service, you are doing that additional service. If these conditions aren't met, expenditure will be included. That means if these conditions are met, expenditure will be excluded. If these conditions are not met, then then that will be added to the value of supply. Understood? So this is what one related aspect of 15 subsection 2 clause C. Right. So 3 additions we have covered. So what are the 3 additions we have covered? 15 subsection 2 clause A says that any tax, charges, cess collected under any other law apart from GST and compensation cess is required to be added. 15 subsection 2 clause B, if any amount incurred by the recipient on behalf of the supplier, that is also required to be added. 15 subsection 2 clause C, which says that incidental expenses or any amount charged by the supplier but for doing something at the request of the recipient, those all should be added to the value of supply. Now we have 15 subsection 2 clause D. 15 subsection 2 clause D says that one more item which is required to be added to the transaction value is in case if you are collecting any interest, late fee, penalty for delayed payment of any consideration for any supply. So in case of credit based transaction, let us say you made the supply of goods, you made the supply of services on credit basis. In case if the payment is just in the time of supply chapter itself, I have told, just in the previous chapter I have told this point. So you initially made a supply amounting to 1 lakh rupees, charging GST at the rate of 18,000. You gave them 3 months of credit period. Within 3 months, if you don't make me the payment, I will collect from you some interest. I will collect from you from some late fee. I will collect from you some penalty. So like that, you have clearly told, in case of delayed payment, you will collect interest, late fee or penalty. Sir, will that interest, late fee, penalty also required to be added to the value of supply? Yes, on whatever interest, late fee, penalty you are collecting for late payment, that also should be added to the value of supply. But here once again the same issue will come. Sir, I would have already given the invoice. No, I would have already given tax invoice. Now how will I now add it, sir? Now you will not add it. For that you will give debit note. For that you will give debit note. So if you come back to this example, initially you give the invoice amounting to 1,18,000 rupees. Thereafter, whenever you are collecting interest, in case if the recipient did not make the payment within time, you will be collecting the interest. No, then you will give debit note. Let us say for example, the recipient is coming and making the payment on 15th of July. So on 15th of July, you will give the debit note for 10,000 rupees and then you will collect the amount of GST. Able to understand? Now, one more point you have to always keep in mind. Whenever you are collecting interest, late fee, penalty for delayed payment, always assume that the amount which has been collected is inclusive of GST unless specifically mentioned in the question. Unless specifically mentioned in the question, you assume that whatever interest, late fee, penalty which you are collecting for late payment, that is inclusive of taxes. Quite simple business logic here. See, when the customer has not made the payment within time, if we are asking interest or late payment, in many of the cases, they will not pay me interest and late fee only. Now, if I ask them, sir, you have to pay me the late fee, interest, penalty along with the GST, forget about it. You are not going to get it. So that's why whenever you are collecting late fee, interest, penalty for delayed payment, that you assume it as inclusive of GST unless specifically mentioned in the question. Sometimes in the question specifically they will mention 10,000 rupees of GST exclusive of taxes. Like that, if they are mentioning, then only consider that interest, late fee, penalty as exclusive of taxes. If they did not mention anything, assume that that amount is inclusive of GST, because specifically no one will pay separate along with interest, late payment and all. No one will pay you excess GST amount also. So this 10,000 rupees will be considered as inclusive of GST. And what will be the rate of GST applicable on this interest, late fee or penalty, sir? Whatever rate of GST which is applicable for your main supply, the same rate of GST will become applicable on the interest also. Let us say your original supply against which you are collecting this interest is a taxable at the rate of 18%. Even this interest also will be applicable at the rate of 18%. So this 10,000 rupees will contain GST amount. Do the reverse calculation. 10,000 rupees into 18 divided by 118, you will get the GST figure. Let us say your original supply will attract GST at the rate of 12%. Then even this interest also will be attracting the GST at the rate of 12%. In that case, interest component will be 10,000 into 12 divided by 112. Let us say if your original supply is attracting GST at the rate of 5% only, even this interest also will attract GST at the rate of 5% only. 10,000 into 5 divided by 105. Understood? Clear and comfortable? So what will be the rate of GST? See, regarding this interest, few things we are required to understand. Sir, will interest be on interest or late payment charges also I am required to collect GST? Yes. Sir, what will be time of supply? When I will be liable to pay GST on that interest, late fee or penalty? Whenever you have actually received it. That's what we have covered in 12 subsection 6 and 13 subsection 6 of the time of supply chapter. Sir, what will be the rate of GST applicable on that interest, late fee, penalty charges? So whatever rate that is applicable on your main supply, the same rate of GST will become applicable. Fourth point, always imagine that interest, late fee or other penalty for delayed payment is inclusive of GST unless specifically mentioned in the question. So these points you have to keep it at the back of your mind, right? So this is where most often the students will try to commit the mistake. I hope you will not do it because I explained you clearly. Then one more last item which is required to be added to the value of supply under 15 subsection 2 is subsidies directly linked to the price, excluding subsidies provided by central government or state government. So in case if you are receiving any subsidy in relation to the supply whatever you have made, that subsidy is also required to be added to the value of supply provided to two conditions. Subsidies will be added to the value of supply only on fulfillment of two conditions. Number one, that subsidy is something which should be linked to the price. Subsidy should not be a blanket subsidy. So linked with the price, they should have given the subsidy. Let us say, for example, you are selling the article at 100 rupees. For every article you are selling at 100 rupees, 20 rupees of subsidy you are getting. So like that, price linked subsidy should be there. It should not be a blanket subsidy. What is blanket subsidy? Let us say, for example, you are doing some good job. Some NGO came and told you will give you some bulk subsidy of 10 lakh rupees. So should this be added? No, because it is not a price linked subsidy. So subsidies should be added to the value of supply only when two conditions are satisfied. Number one, that subsidy should be linked with the price, not a blanket subsidy. Number two, that subsidy should be given by other than central government or state government. That subsidy should be given by, provided by other than central government or state government. When these two conditions are satisfied, even subsidies also should be added to the value of supply. So what are the two conditions? Tell me. Subsidy should be linked with the price. It should not be a blanket subsidy. Number two, that subsidy should be given by other than central government or state government. When these two conditions are fulfilled, that subsidies also should be added to the value of supply. Clear? Understood? So this is what regarding this thing. So I think most of the concepts and all I have covered it. So 15 subsection 2 we have covered. So what and all are the additions which are required to be made to the value of supply we have covered. So coming back to the overall structure here. So we are done with 15 subsection 1 and we have also done with 15 subsection 2. Now we have to go ahead and try to understand 15 subsection 3. We have to go ahead and try to understand 15 subsection 3. So we are done with 15 subsection 1, 15 subsection 2. We have to understand 15 subsection 3, which is relating to treatment of discounts. So this 15 subsection 3 we are required to understand. Right. So before the break, we are done with 15 subsection 1 and 15 subsection 2. So now we will talk about 15 subsection 3, which is talking about treatment of discounts. So it is quite common in the business practices that suppliers will give discounts to their recipients. Now what should be the treatment of that discounts? Are that discounts permitted to be reduced from the value of supply? That's what we need to decide. So they say that for the purpose of 15 subsection 3, they have divided discounts into two categories. The discounts could be of two categories. So what are the two category discounts? One is pre-supply discount and another one is post-supply discount. So 15 subsection 3 clause A will talk about something called a pre-supply discount, and 15 subsection 3 clause B will talk about something called post-supply discount. Okay. So first let us see what is a pre-supply discount. Pre-supply discounts are those discounts which are given at the time of making supply, and these discounts are recorded on the invoice itself. Those discounts which are given either at the time of making supply or before making supply, and those discounts which are duly recorded on the invoice. On the invoice itself, these discounts will be recorded. Let us say, for example, you went to some shopping mall, you made a purchase. Let us say you made some 10,000 worth of purchase. On the 10% discount they have given. So that discount they are giving it at the time of making supply, and whatever discount they have given, that discount they will record it on the invoice also. 10,000 rupees is the total value minus 1,000 rupees discount, 9,000 payable. So now whether if the discount was duly recorded on the invoice, so if you say here 10,000 worth of shopping I have made, sir, they have given me discount amounting to 10%, and they have shown it in the invoice also, 9,000 rupees net they are collecting from me. Now GST should be charged on what value? Should the GST be charged on this 10,000 rupees, or should the GST be charged on this 9,000 rupees? So 15 subsection 3 clause A clarified that the GST has to be charged on 9,000 rupees. So those discounts which are given at the time of making supply and those which are duly recorded on the invoice, those are called as pre-supply discounts, and they must be excluded from the value of supply. On that you are not required to pay the GST. Exclude that from the total value of supply. On the balancing figure only you are liable to pay the amount of GST. That is what 15 subsection 3 clause A says. Very simple. Now we have 15 subsection 3 clause B, which is talking about post-supply discounts. The name itself says post-supply discounts. After supply the discount has been given. See, in many cases, especially in B2B transactions and all, it will not be possible for the supplier to give the discount at the time of making supply only. Sometimes supply will happen at a later point of time, discount will be given. So if I have to give you a few examples of the post-supply discount, cash discount, you often might have read about cash discount. Like supplier will sell the goods on credit basis. He will say, if you come back and make me the payment within 15 days, I will give you 2% discount. So at the time of making supply, he did not give the discount. But later when the recipient comes back and makes the payment within that specified time limit, then he will give the discount. So this is one example. And there will be a few more examples in case of dealers. In case of dealers and all, manufacturers will give them something called volume discounts. To a dealer, they will say, in this year, if you purchase 10,000 quantity from us, we will give you 5% discount. So this is volume discount. Whether that dealer will be eligible for that 5% discount or not, I don't know it. At the time of making supply, I don't know. By the end of the year, if he has actually made a purchase of total 10,000 quantity from me, then only I will give you discount. So this is also an example of post-supply discount. Sir, you told in case of pre-supply discount, which is given at the time of making supply, which is also duly recorded on the invoice, we can exclude it from the value of supply. Okay, agreed. Then what about this post-supply discounts, sir? So those discounts which are not given at the time of making supply, but which are given at a later point of time, what should be the treatment of that post-supply discount? So when it comes to treatment of the post-supply discounts are also excluded from the value of supply. Post-supply discounts will also be excluded from the value of supply when three conditions are fulfilled. Sir, what are the three conditions? Number one, so that there should be an agreement. There should be an agreement to give the discount at the time of making supply. At the time of supply, you are not giving discount, but there is an agreement. There is an agreement to give the discount. The discount should have been agreed at the time of making supply. So you are not giving the discount at the time of making supply, but you have agreed to give the discount at the time of making supply. Like if you take the cash discount, I am saying if you make the payment within 15 days, I will give you discount. So at the time of making supply, I have agreed to give you the discount. So there must be an agreement to give the discount at the time of making supply. Number two, we should be able to calculate the discount invoice wise. We should be able to calculate discount invoice wise. It should not be a bulk discount. We should be able to calculate the discount invoice wise. At each invoice level, I should be able to calculate the discount. And third condition, recipient must reverse the proportionate ITC. Recipient must reverse proportionate ITC. So when all these three conditions are satisfied, then that post-supply discount also will be excluded from the value of supply. So what are the three conditions which are required to be complied with? Number one, there must be an agreement to give the discount at the time of making supply. Number two, we should be able to calculate the discount invoice wise. Number three, recipient must reverse the proportionate ITC amount. When all these three conditions are satisfied, even that post-supply discounts also will be excluded from the value of supply. Sir, how this will practically work out? How this will practically work out is, let us say for example, there is one supplier, he made some supply amounting to 1 lakh rupees. And on that GST is 18,000 rupees to the recipient. Now for this initial transaction, he will give tax invoice. Now this tax invoice will be declared in his GSTR1. He will discharge the output tax liability amounting to 18,000 rupees. Now on the basis of this tax invoice, this recipient will also take the ITC amounting to 18,000 rupees. Yes or no? Then thereafter, let us say for example, some post supply has been given, some post supply discount has been given, where there was an agreement to give the discount. Discount also I can calculate invoice wise, and recipient has also agreed to reverse the proportionate ITC. Now how this discount will be passed on is, we will give something called a credit note. Credit note under GST Act I will give. Sir, what is the credit note under GST Act? So since my recipient has also agreed to reduce this amount, proportionately reverse the ITC. So what I will give, let us say I am giving 10% discount. So 10,000 for value I am giving discount. On the 10,000 whatever GST component is there, that also I have to reduce. So I'm giving 10% discount. If I give 10% only on 1 lakh rupees, it will not be enough. I am required to give the discount of that GST also. So on that discount also I will calculate GST, which will come to 1800 rupees. Total for 11,800 rupees, I will give something called credit note under GST Act. So now when I give this credit note to the recipient, now supplier will declare this credit note in his GSTR1, and his output tax liability will get reduced by 1800. Whatever GST amount that is there in the credit note, that amount when you are declaring, that credit note when you are declaring in your GSTR1, your output tax liability will get reduced. And on the basis of this credit note, even the recipient on the basis of invoice, he has taken 18,000 rupees full ITC. Now you got the credit note. On the basis of this credit note, even the recipient is also required to reverse that 1800 rupees of input tax credit. Even on the basis of this credit note, recipient is also required to reverse that proportionate ITC, that 1800 rupees is required to reverse it. This is how practically the things will work out. So first you will give tax invoice, then you will give credit note. In case if you are giving discount for the GST component also, then you will give credit note under GST Act, and that credit note will be declared in the GSTR1. If you declare that credit note in the GSTR1, your output tax liability will get reduced for the supplier, and the recipient is also required to reverse the proportionate ITC on the basis of that credit note. Okay, see, sometimes what will happen is, let us say initial tax invoice has taken place. Thereafter you are giving discount. Let us say there is no agreement. There is no agreement at the time of making supply, but you are giving discount. So now one of the condition got violated. There is no agreement at the time of making supply, but still you are giving discount depending on the stock levels and all. Sometimes even though there is no agreement at the time of making supply, suppliers will give discount. So there is no agreement, but still the supplier is giving discount. Let us say he is giving 10,000 rupees of discount. Sir, can I reduce the discount? Can I reduce the GST also? No, here you can't reduce the GST. You can give discount only on value. You can discount, in this case, you can give discount only on value. You can't give discount on the GST component. Why, sir? Why? Because conditions are not fulfilled. So 3 conditions are required to be fulfilled. To reduce your GST liability, 3 conditions are required to be fulfilled. Number 1, there must be an agreement at the time of making supply. Number 2, you should be able to calculate the discount invoice wise. Number 3, recipient should be able to reverse a proportionate ITC. Here first condition itself is violated. There was no agreement at the time of making supply. So since there is no agreement at the time of making supply, you can give discount only on value. You can't give discount for GST component here. So in this case, if I am giving discount only on value, if I am not giving discount on GST, then I will give credit note, but that is not a credit note under GST Act. That is a credit note. That is a credit note which is commercial, or let me put it this way, that I call it as commercial credit note or financial credit note. Commercial credit note or financial credit note, I will call it. Sir, what is commercial credit note and what is financial credit note? So both are used interchangeably. So in the commercial credit note or financial credit note, through that credit notes, you will only pass on the discount of for value. You will not pass on any discount for GST. Sir, but what is credit note under GST Act? Credit note under GST Act is such a credit note where you are giving discount for the value also, where you are giving discount on the GST component also. So if you are giving discount for the GST component also, then only you can give credit note under GST Act. In case if you are not giving discount on GST, if you are giving discount only on value, then you will give commercial credit note or financial credit note. Now this commercial credit note is not required to be declared in your GSTR1. Even if you declare it also, your output tax liability will not get reduced. And on the basis of this commercial credit note or financial credit note, recipient is also not required to reverse any ITC. Recipient is also not required to reverse any ITC. So one important point I am making it here. Number 1, in case of secondary discounts, in case of post supply discounts, if 3 conditions are fulfilled, then we will give credit note under GST Act. That credit note under GST Act, supplier will declare in his GSTR1, his output tax liability will get reduced, and on the basis of that credit note under GST Act, recipient is also required to reverse the ITC. But in case of commercial credit note or financial credit note, where I am giving discount only on value, not on GST, that commercial credit notes or financial credit note will not reduce the output tax liability of the supplier, and on the basis of that commercial credit notes or financial credit notes, even the recipient is also not required to reverse any input tax credit. Understood? Right. So this is what you are required to remember. Now there is one circular. There are some circulars associated with this. Let me try to elaborate that circulars. So one recent circular, one amendment is there, one circular is there that I will try to explain. So one part of the circular I have already explained. First part is on the basis of commercial credit note or on the basis of financial credit note, the recipient is not required to reverse any ITC. Only when the credit note under GST Act has been given, then only recipient is required to reverse ITC. If any commercial credit note or financial credit note has been given, recipient will not be required to reverse any ITC. Now, one more interpretation, one more clarification which the department has recently given is, let us say there is a Tata Motors. There is a Tata Motors. Now, Tata Motors has sold some stock to the dealer. They have sold some cars to the dealers. Now, these dealers will sell the cars ultimately to the customers. These dealers will ultimately sell the cars to the customers. Let us say Tata Motors has sold some 1 lakh quantity of the cars to the dealer. Total some 1000 quantity of the cars they have already sold. For that, they have already given the tax invoice. Okay, on the basis of which this tax invoices are declared in the Tata Motors outward supplies, they have discharged their output tax liability, and this dealer has also claimed ITC on that 1000 cars. Now, at the end of the year, some stock is still left with the dealer. Some stock is still left with the dealer. Now, in order to clear his stock, in order for the dealer to help him to clear the stock, what the Tata Motors has done is they told, okay boss, I will give you one discount now. I will give you some discount now. So I will give you some discount so that you can reduce your prices and you can clear the stock. So like that they have given discount. This discount was not agreed. This discount was not agreed at the time of making supply. Listen carefully. Important circular, high chance of getting tested in the examination. Amendment also, little complicated also, listen carefully. So Tata Motors initially sold some 1000 quantity of the cars to the dealers. For that they have given tax invoice, which Tata Motors has paid output tax liability also. Dealer has also claimed ITC. But at the end of the year, some stock is left out. Let us say, for example, some 50 cars are still left out. The stock is not moving. Now, as a kind gesture, what Tata Motors has done is, they told one thing, dear dealer, you do one thing. I will give you discount. You clear your stock. I will give you discount. You clear your stock. So let us say, for example, he gave some discount amounting to 10 lakh rupees of discount he has given. For this, he will give commercial credit note. Sir, why commercial credit note, sir? Why not credit note under GST Act? Here he can't give credit note under GST Act because it is a post-supply discount for which there was no agreement. Only when there is an agreement, then only GST amount will be reduced. But here there is no agreement. Since there is no agreement, he will give what? Commercial credit note he will give. commercial credit note he will give. That means this dealer is not required to pay 10 lakh rupees to the Tata Motors. This dealer is not required to pay 10 lakh rupees to the Tata Motors. Okay, so he's having some dues for this 1000 quantity. He will have some dues. No, from that dues, they are giving some 10 lakh rupees of discount they are giving. Okay, fine. So now what dealer will do, since he got the discount, that benefit or that he will try to reduce the prices and he will try to clear his stock. Now what one proper officer has done the interpretation? Listen, one proper officer, what he has done the interpretation is, he has done the interpretation. This Tata Motors have given the discount of how much? 10 lakh rupees. Discount given means cash received only. Indirectly, if Tata Motors has given you has given the dealer discount of 10 lakh rupees, that means what? They are not collecting. They are not collecting his benefit only. If Tata Motors is not asking 10 lakh rupees from the dealer, that is also a consideration. No. See, let us say for example, if they are required to pay 50 lakh rupees here, they have 50 lakh rupees of due. For that, Tata Motors has given 10 lakh rupees discount. So how PO has interpreted is, you are giving 50 lakh rupees and Tata Motors is giving back 10 lakh rupees. They have done some over interpretation here. Let us say this dealer is having a dues of 50 lakh rupees. Now Tata Motors has given 10 lakh rupees of discount. So how they have interpreted, you have given 50 lakh rupees and Tata Motors is giving you back 10 lakh rupees. They are giving you back 10 lakh rupees. So here Tata Motors has given this dealer some 10 lakh rupees of benefit. So this dealer has got a consideration of 10 lakh rupees. Money not given is equal to money received only. No. So they have told that this dealer has got 10 lakh rupees of consideration from Tata Motors for inducing the supply, for inducement of supply. So PO has interpreted. So let us say you are selling these cars. Let us say you are selling the car. You are supposed to sell the car at 20 lakh rupees. But now they have given discount. Now you will reduce the price, no? So let us say on each car, on 10 cars, they have given discount here. So 1 lakh on 10 cars, they have given total 10 lakh rupees of discount. Okay. Now what this seller is doing, what this dealer is doing, let us say he has to sell this car at 20 lakh rupees. But now he wants to clear the stock. He got the discount, no? So he will reduce 1 lakh rupees and he will sell the car. He will reduce the price to 19 lakh rupees so that he can clear the stock. So he's selling to the customer at 19 lakh rupees only. But what the PO has interpreted is, boss, you might be selling it to the customer at 19 lakh rupees only. But you got 1 lakh rupees as a discount. Consideration. Discount is nothing but consideration. So you got 1 lakh rupees from Tata Motors for inducing this supply. For inducing this supply. If you go and look at the consideration definition. So once again, let me take you back here. Very important. Here we will take some time to understand this in a detailed manner. So if you come back to the consideration definition under the supply chapter. Listen. So where is consideration? Come on. Yeah, here you have. So if you see here, sir, what is consideration? Consideration in relation to supply of goods or services or both includes any payment made or to be made, whether in money or otherwise, or in response to an inducement of supply. It includes monetary value of any act or forbearance in respect of or in response to or for inducement of supply. So here what PO has interpreted is, this dealer is making the supply at 19 lakh rupees only to the ultimate customer. But for inducing this supply, to make this supply happen, the Tata Motors has given you discount of 1 lakh rupees on each car. So what PO has told is, this 1 lakh rupees will be added and your value of supply will be total 20 lakh rupees, he has told. He has told what? This 1 lakh rupees should be added because this is consideration. You are getting it from the Tata Motors for inducing this supply. Consideration need not be received only from the recipient. Consideration can be received from other person also. So now PO has interpreted, even though you are selling at 19 lakh rupees this car to your customer, for inducing this supply, you got discount of 1 lakh rupees from the manufacturer. So this 1 lakh rupees is also a consideration for inducement of supply. You will be liable to pay GST on total 20 lakh rupees, even though you are selling it to your customer for 19 lakh rupees only. Like this, POs have started harassing. Now the department has clarified that, see, it is a transaction on principal to principal basis. It is a completely transaction on principal to principal basis. When Tata Motors has sold the cars to the dealers, dealer will become the owner. He will become the principal. Now that dealer is giving the stock. The dealer is selling the stock to his customers, which is once again a transaction on principal to principal basis. And when the dealer has given discount, when the dealer is reducing the price, while selling the goods to the ultimate customer, he is reducing the price not for clearing the Tata Motors stock. That is his own stock. He has already purchased that 1000 quantity. For clearing his own stock, he is giving that discount. For clearing his own stock, he's giving that discount. So this transaction is happening on a principal to principal basis. So this 1 lakh, you don't add it to the value of supply. Like the department has given a clarification. This 1 lakh rupees should not be added. This 1 lakh rupees of discount which this dealer has got from the Tata Motors is not for inducement of Tata Motors supply. This is supply being made by dealer. He is clearing his own stock. So don't add that 1 lakh rupees. It is not for inducement of this supply. It is not for inducement of this particular supply. So don't add this 1 lakh rupees. Here the value of supply will be 19 lakh rupees only. This is what the department has clarified. This is what the department has clarified. But associated with this, one more point also they have told. Let us say, for example, there is Tata Motors. Now, this Tata Motors is having one dealer. This Tata Motors is having one dealer. Now, this dealer will buy the cars from Tata Motors and this dealer will sell it to the customers. Now, one day, what happened is one big MNC company is there. Now, this MNC company wanted to gift 10 cars to their best performing employees. One MNC company is there. This MNC company wants to gift some 10 cars to their best employees. Now, what they have done is they have approached directly Tata Motors. Sir, we want to gift 10 cars for our employees. They have directly approached the manufacturer and they ask, we want some discount, sir. They told, okay, sir, no problem. On each car, I will give 1 lakh rupees of discount. Tata Motors agreed with the customers to give discount at 1 lakh rupees. Discount on each car for 1 lakh rupees. But if you want to purchase a car, you can't go to the showroom. You can't go to the company. At the factory, they will not make any sale. If you want to make the purchase of a car, you have to go to the showroom only. You have to go to the dealer only. So purchase of cars can only happen through dealer. That purchase of cars, you can't go to the factory and buy it. So what Tata Motors has told to this MNC company is one thing. Sir, you go to the nearest dealer and you tell them that we have asked you to give you, we have confirmed you to give 1 lakh rupees of discount, and that dealer will sell you the car at 1 lakh rupees of discount. So this MNC company went to the dealer. They are purchasing 10 cars. Each car will cost 20 lakh rupees. But they are asking for a discount. Why? Because company has asked them to do it. So they went to the dealer and they told, sir, we want 1 lakh rupees of discount on each car. But dealer will not agree. No. Why dealer will not agree? Because he could sell that car for 20 lakh rupees and he will make profit. If he agreed to sell that car for 19 lakh rupees only, 1 lakh rupees of profit he is losing. Now he will complain to the manufacturer. Sir, why are you asking me to sell to this customer 20 lakh at 19 lakh rupees only? I can sell it at 20 lakh rupees. 1 lakh rupees I am losing. No. Why I should lose? Now manufacturer will say, don't worry. You sell this motor vehicle, you sell this car at 19 lakh rupees only. That 1 lakh rupees we will give you as discount. Anyhow, you are required to pay us the amount. No. From that amount we will reduce. For this they have given commercial credit note. So like this, 10 cars I am selling at 19 lakh rupees. On the 10 cars, each car I am getting a discount from the manufacturer. He is giving, okay, 10 cars you sell it at 19 lakh rupees only. That 1 lakh rupees, whatever you are losing, we will try to give you a credit note. You are required to pay some amount to us. No. From that we will reduce that 1 lakh. So like that, here they have given commercial credit note amounting to 10 lakh rupees. And this dealer ultimately he is selling that car at 19 lakh rupees. Now, the previous interpretation will not become applicable here. In this case, since the manufacturer is under an obligation to make the supply to the ultimate customer at discounted price. So now whatever commercial credit note he is giving it to the dealer, here it is for inducement of the supply only. Why? Because the manufacturer is under an obligation to the customer to supply at a discounted price. To make it happen, for that dealer he is getting the discount of 1 lakh rupees on each car. So here, this discount whatever has been given by the manufacturer to the dealer, here it is for inducement of supply. And this 1 lakh rupees should be added to this 19 lakh rupees. That 1 lakh rupees should be added. That will be considered as value of supply. On total 20 lakh rupees, GST will become applicable. I hope you are able to understand the difference between previous case and this case. In the previous example, the manufacturer is under no obligation to supply at a discounted price to the customer. The dealer is doing on his own. So that discount, whatever he has received from the manufacturer, that is not for inducement of any supply. That will not be added to the value. Whereas in the second case, the manufacturer is under an obligation to provide at a discounted price to the final consumer. To fulfill that obligation, he is making it happen through the dealer. For that purpose, he is giving discount to the dealer. Now here it will be this discount, whatever they are receiving, that is for inducement of supply. And here we have to add it to the value of supply. Understood? So if you read that circular and all, it will sound little complicated here, but this is what ultimately the summary is. With the help of this example, you will be able to understand it in a better manner. You will be able to relate the things in a better manner. So just take the help of the example. I know I have taken a lot of time for this circular because this is amendment. This is from where the questions are going to come. That's why. I hope you understood it. If it had been a regular class or EOB class, we would have gone much deeper. But as you all are aware, this is marathon. Come on. Where are you? Yes. At the end, I have given this extra circulars. See here. This is circular. Whether a post-supply discount offered by a manufacturer to its dealer or distributor would be treated as consideration paid by manufacturer for dealers' supply of same goods to end customers as a monetary value for inducement of the supply of the goods manufactured by him to the end consumer. So this is what I have tried to clarify it with the help of the example, whatever I have used. Now, one more thing also come here. In this circular, one more point also they have clarified. Now, what happened is, let us say Tata Motors has sold some car to the dealer. Now, this dealer is left with some stock. Now what happened is, this Tata Motors has given him some discount, post-supply discount they have given, for which they have given commercial credit note, 10 lakh rupees worth of discount they have given. Now what dealer will do is, since he got the discount, he will spend more money on advertising. He will spend more money on advertising so that he can clear his stock. He will, since company has given him the discount, what he will do, he will spend more money on advertisement and he will clear the stock. Now what one PO has interpreted is, hey, you got the discount, no? Money waived is equal to money received only. If the company is not asking you 10 lakh rupees of consideration, that means you are not required to pay 10 lakh rupees. Not paying is equal to receiving only. So this dealer has got consideration, 10 lakhs worth of consideration he has got. In return, what he is doing? He is doing advertising. He is doing advertising for the manufacturer, like that he has interpreted. But here also the department has clarified, in this case, when the dealer is doing the advertisement, he is not doing the advertisement from the manufacturer. He is doing the advertisement to clear his own stock. He's doing the advertisement for clearing his own stock. He's not doing advertisement for the manufacturer. He has given discount, but why this? But dealer is doing the advertisement, that whatever amount that has been reduced, for that amount he's spending on advertisement. Why he's doing the advertisement? For clearing his own stock or for clearing the manufacturer's stock? It is for clearing his own stock. So for clearing his own stock, he is giving advertisement. He's incurring expenditure on advertisement. He's not providing any advertisement or marketing services to Tata Motors. So there is no supply of service here. For this 10 lakh rupees, there is no supply of service he is doing to manufacturer. So it is not treated as supply. Yes, he is doing advertising, but that advertising he is doing it for clearing his own stock, not for clearing the manufacturer's stock. He is not providing any service to the manufacturer. Like that they have clarified. But on the other hand, let us say, for example, Tata Motors is giving some discount to the dealer with an agreement. So while giving discount, the Tata Motors has clearly put the condition that, boss, we are giving a discount to you, but for that discount, what you are required to do is, you are required to do some specific advertisement. Like, let us say, for example, you are required to conduct one expo, you are required to keep a stall at a shopping mall. So if you do that specifically, if you keep the stalls, if you keep some expos, if you do some advertisement specifically as per our requirement, then only we will give you discount. Like that, if the Tata Motors has given discount with a specific condition for advertising, in that case, the dealer, whatever discount he is getting, that is a consideration for supplying advertising and marketing services, that will be considered as supply of services. On that, GST has to be collected. Able to understand? So if the discount has been given by the manufacturer to the dealer with a specific condition that dealer has to do certain kind of advertising to promote the manufacturer's brand or product, in that case, that discount is equal to consideration received for supplying marketing services. That will be considered as supply of services and GST will become applicable. Understood? Right. So this is the circular, recent circular, very important. So whatever is there in the circular, that's what I tried to explain it with the help of this example. I hope you are all able to understand it. Okay, right. Now, so let us come back to the context here. So we have covered 15 subsection 1, 15 subsection 2, 15 subsection 3. So whenever the transaction is happening between two unrelated persons and price is the sole consideration, how to determine the value, that we are done. Now we will come to 15 subsection 4. Now we will come to 15 subsection 4. Sir, what is 15 subsection 4 saying? As we have already seen, whenever the transaction is happening between either two related persons, or when price is the sole consideration, or when price is not the sole consideration, then we are required to determine the value as per the rules. And what rules we have, sir? Starting from rule number 27, rule number 28, rule number 29, rule 30, rule 31 we have. So let us try to understand one by one. So first case, let us say, for example, you are making some supply where some non-monetary consideration is involved. You are making some supply with unrelated persons only, but there is some non-monetary consideration. You are getting a monetary consideration, along with that some non-monetary consideration is also there. Or you are receiving completely non-monetary consideration. So you are making a supply You're making some supply of goods or you're making some supply of services, but some non-monetary consideration is involved. When I say non-monetary consideration, it could be monetary plus non-monetary, or it could be completely non-monetary consideration. So definitely 15 subsection 1, 15 subsection 2, 15 subsection 3 will not become applicable. Sir, in this case, how to determine the value of supply? In this case, how to determine the value of supply in case if there is a supply in which there is a non-monetary consideration involved? Now they say that you need to determine the value of supply as per rule number 27. You need to determine the value of supply as per rule number 27. Sir, what is rule number 21 saying? You have to follow in this order. So in this case, the value of supply should be open market value. Open market value of goods and services, or open market value of the same goods and services. So whatever services you are providing, you have to determine its open market value. So that will be considered as value of supply. Sir, if open market value is not available, then it will be you are getting monetary consideration. No, that monetary consideration plus money equivalent of non-monetary consideration. Plus money equivalent of non-monetary consideration. So whatever money consideration, let us say for example, I am getting for making a supply 20,000 rupees of cash and 50,000 rupees worth goods also I am receiving. Now I have to determine what is the monetary value of the what is the monetary money equivalent of the non-monetary consideration. So let us say I'm making a supply for which I received 10,000 rupees of cash and also have received some goods. Now I have to determine what is the money equivalent of this goods. Let us say for example, money equivalent of this goods is 50,000 rupees. So 10,000 rupees plus 50,000, 60,000 rupees will become my value of supply. Sir, even money equivalent of the non-monetary consideration is also not available. Then in that case, the value should be value of like, kind and quality. Value of like, kind and quality. So for this, like for the goods or services, whatever you are supplying, like, kind and quality of goods or services value you have to take, that will become the value of supply. Sir, if that is also not applicable, then what you should do? Then you have to find out the value on the basis of rule 30. Sir, what is that rule 30? Cost plus 10% margin. Cost plus 10% on cost basis. So you have to determine all the cost and you have to add 10% to it. That cost plus 10% will become the value of supply. Sir, if cost also I am not able to determine, then you have to follow rule number 31, which is a best judgment assessment. Which is what? Best judgment assessment. Even cost also, if you are not able to determine, best judgment assessment. So depending on whatever information available, so using some other reference points, you have to determine the value. Best judgment assessment you are required to do. However, in case of supply of services, what you can do is you can skip. In case of supply of services, you can skip rule number 30 and directly come to rule number 31. Why? Because in case of services, how you will determine the cost? For goods, we can determine the cost. What is the material? What is labor? What are overheads? That we can calculate. But for services, it is highly difficult to determine the cost. No. So that's why what you can do is, in case of services, you can skip that section. You can skip that cost and you can directly come to rule number 31. Why? Because for services, it will be very difficult to determine the cost. We can't determine the cost. Understood? So rule 27 says, in case if you are making any supply, where non-monetary consideration is involved, that means either monetary plus non-monetary consideration is there or completely non-monetary consideration is there. So in that case, you have to determine the value as per rule number 27 in the same order. You have to follow. First one, it should be open market value. So let me come here. Right, let us come here. So what they're saying, so in case of non-monetary consideration, so it should be applied in the same sequence, which says open market value. Sir, what is open market value? Full value of money excluding GST payable by a person to obtain such supply, same supply. So to obtain the same supply, what will be the full value of money excluding GST you are required to pay at the time when the supply is being at the time when supply being value is made. So on whatever day, on the day at which the supply is made, on the same day, if any other supply happens of the same article, what value you will pay, provided such supply is between unrelated person and price is the sole consideration. That I call it as open market value. So if open market value is available, you have to go with the open market value. Sir, open market value is not available, sir. Then value will be money consideration plus money equivalent of non-monetary consideration. Sir, that is also not available, sir. Then it will be value of supply of goods and services of the like, kind and quality, where value cannot be determined under clause A or B above. And sir, that is also not available. If it is not ascertainable, then you have to apply rule 30. What does rule 30 say? Cost of supply plus 10% markup. Sir, if that is also not applicable, then you come to rule number 31. And however, for supply of services, the supplier can skip the cost plus 10% and directly come to rule number 31. So this is how you need to determine. Sir, where this is mentioned? In rule number 27, they have mentioned it. Now, let us try to proceed further with rule number 28. Sir, when rule number 28 will become applicable? So rule number 28 will become applicable. If you see here, value of supply of goods or services or both between distinct persons or related persons other than through an agent. So I told 15 subsection 1 will become applicable only when you are making supply between unrelated person. Sir, but what if supply is between related persons or distinct persons under section number 25? I have already told you who are distinct persons under section number 25. Multiple registrations under same PAN. So establishment, registered establishment in one state, unregistered establishment in another state. So like that, distinct persons. So in case of supply of goods or services, either between related persons or between distinct persons under section number 25, in that case, you can't go by the transaction value. If the supply is happening between related persons or if the supply is happening between distinct persons under section number 25, you can't take transaction value. Why you can't take transaction value? Logic is very simple. When the supplier and recipient both are related, the relationship will have an effect on the price. The relationship will definitely influence the price. So that's why they have told whenever transaction is happening between related persons or whenever transaction is happening between distinct persons under section number 25, then you can't take transaction value. Then how can I determine the value of supply, sir? So here also they say first one, go with the open market value. Go with the open market value. In case open market value is not available, here there is no, here this point is not there. Directly they told in case open market value is not available, value of like, kind and quality. Value of like, kind and quality you have to consider. Sir, if value of like, kind and quality is also not available, then you come to rule number 30, cost plus 10%. Sir, if cost also I am unable to determine, come to rule 31, best judgment assessment. Here also in case of supply of services, you can skip rule number 30 and come to rule number 31 directly. In case of supply of services, you can skip rule number 30 and you can come to rule number 31 directly. Understood? So this is what rule number 28 says, more or less similar to rule number 27 only, but that second point will not be there. Monetary plus money equivalent of non-monetary consideration, that thing will not be there. Okay. So in case supply is happening between related persons or distinct persons under section number 25, how you can determine the value of supply? So you have to go with the open market value. If open market value is not available, value of like, kind and quality. If that is also not available, cost plus 10%, rule 30. If that is also not possible, rule number 31, best judgment assessment. But however, there are some provisos here. To this rule number 28, there are some provisos. What are that provisos? So let me try to explain that one by one. So what they try to say here is, if the goods are intended to be supplied as such by the recipient. Let us say a supply is happening between related person or distinct person, and you are making supply of goods, and those goods will be sold as such as it is. Those goods will be sold by the recipient. In that case, 90% of the price charged for supply of the goods of like, kind and quality by the recipient to his unrelated customer, that itself will be considered as value. Sir, what they are trying to say here? Don't worry, I have a example for you. Listen. So I will take one notes here. Right. So let me take this example. Copy. Marathon notes. Right. See here. So what they are trying to say, first proviso says that in case supply is happening between related persons and distinct persons, but the supply which is happening is supply of goods. Let us say there is a factory in Delhi and you have a depot in Mumbai. Both are distinct persons only. Now you are doing a stock transfer. So there is a supply of goods happening between related persons under section number 25. So under section number 25, actually rule 28 will become applicable. What does rule 28 say? Just now as we have read. So the value should be either open market value, like, kind and quality, rule number 30, rule number 31. But here they are giving one option. For this supply. Either you can determine the value of supply like this. Following rule 28, which will be open market value, like, kind and quality, or rule 30, rule 31. But in case if you are making supply of goods and those goods will be supplied as such, to an unrelated person. So you made stock transfer to your Mumbai branch. From their Mumbai branch, the goods will be sold as it is without any modification. Those goods will be sold to an unrelated person. When you make that subsequent sale to the unrelated person, there will be sale price. No. In that sale price, you take 90%. That 90% you can take it as value. So like this, one option has been given. It is not mandatory. It is an option given in case of supply between related persons or distinct person. That too only in the case of supply of goods. If you are making supply of goods to your related person who will make further supply as it is to an unrelated person, you have two options. Either you follow rule number 28, that is determine the value as per open market value, like content quality, rule 30, rule 31. Or at your option, 90% of the price at which that goods will be sold to unrelated customer will be there. No, that 90% of the value also you can consider it as value. It is your option. Either of it you can choose it. Sir, what if the supplier is making, what if there is a supply of services happening between distinct persons and those services will be supplied to an unregistered person? Here also will 90% rule become applicable? No. Here only this rule will become applicable. Open market value, like content quality, 30 and 31. Why? Because this relaxation has been given only for supply of goods, not for supply of services. So in case if you are making supply of goods to an unrelated person, distinct person, from there they will be supplied to unrelated person as it is, then only you can take 90% value. In case of supply of services, that relaxation is not there. In case if the supply of service is happening between related persons or distinct person, compulsorily you have to follow this rule number 28, open market value, like content quality, rule 30, 31. One more case. Let us say, for example, there is supply of goods happening between related persons or distinct person. Now this recipient, he will make some modification to that product, then he will sell it to the unregistered person. And the price at which that modified goods will be sold to unrelated person, not unregistered, unrelated. So the price at which that recipient will sell that modified goods to unrelated person is 10 lakh rupees. Sir, can I take 90% of the value here? No. Here only rule 28, usual rule 98 will become applicable. What is it? Open market value, like content quality, rule 30, rule 31. Why? Because this relaxation has been given only when the goods you are supplying into related persons or distinct person, and they will be supplied as such, as it is, without any modification. If they are getting supplied as such, then only you can take either this usual route or 90% of the value. But in case if the recipient related persons or distinct person, if they are doing some modification, thereafter they are selling it to unrelated person, then that provision will not become applicable. You have to come to the usual route of open market value, like content quality, rule 30 and rule 31 only. Understood? Clear and comfortable? Right. Next, one more provision is there. So what is that one more provision is, if recipient is eligible for full ITC, value declared in the invoice itself will be deemed to be the open market value of goods or services. So one more provision also they have told. So what they are saying, if the recipient is eligible for full ITC, value declared in the invoice shall, mandatory, value declared in the invoice shall be deemed to be the open market value. Sir, what is this one more provision? So let me try to explain this also, what they are trying to say it here, the help of example. So let us say there is a related persons or distinct persons. They are making some supply to another related person. So now practically what will happen? Rule 28 should become applicable. But what here the one provision they are saying is, if the recipient is eligible for full ITC, if you are making some supply to the recipient who is a related person or distinct person under section number 25, and this recipient is eligible for full ITC, then rule 28 will become applicable. What rule 28 say? Open market value, like, kind and quality, rule 30, rule 31. But here the provision what it says is, in case if the supply is made between distinct person or related person, and if the recipient is eligible for full ITC, there is no restriction, this recipient will become eligible for full ITC, then you will give the invoice. No, in that invoice you will declare the value. No, that value itself will be deemed to be the open market value. Let us say if in the invoice 1 lakh rupees I have mentioned, your open market value will become 1 lakh rupees, and that 1 lakh rupees will become the value of supply. If in your invoice 10 rupees you are mentioning, that 10 rupees will become value of open market value, that itself will be considered as value of supply. If you are mentioning 1 rupee in your invoice, that 1 rupee itself will be considered as open market value, that will become the value of supply. Able to understand? Clear and comfortable, everybody? So one more provision. First provision says, in case of supply of goods between related persons or distinct person, where the recipient is making the supply of the goods as such to the unrelated person, you can either go with that usual rule 28 or 90% of that price to an unrelated person. One more provision is there to rule number 28, which says that in case of supply between related persons or distinct person, where the recipient is eligible for full ITC, then value declared in the invoice itself will be considered as open market value. If itself is getting considered as open market value, that itself is going to become the value of supply. Understood? Clear and comfortable? Right. So that is what one more provision they are saying. So if recipient is eligible for full ITC, value declared in the invoice shall be deemed to be the open market value of the goods or services in the following cases: distinct persons or related persons. Clear? Next. And one more thing is also there. One more point is also there regarding corporate guarantees. Regarding corporate guarantees also, one more point is there. Listen carefully. See what is this corporate guarantee. So this is also related to rule number 28 only. Let me tell you what is this. These are all little complicated and important from the examination perspective. So that's why I'm giving examples here. And this is where many students will face a difficulty in understanding also. Let us say there is a company H Limited, which is a holding company. There is a company S Limited, which is a subsidiary company. So holding company, subsidiary company, both are related or not? Yes, both are related persons. Now this subsidiary company needs some loan from SBI. Let us say, for example, this SBI, there is a SBI bank. They need some loan. Subsidiary company needs some loan. Now for this loan, this holding company is providing the guarantee. For providing that loan, see, I think for this also one ready chart should be there. Let me take the help of it. Try to draw it once again. Yeah, this chart is there. This is something which I've used in my regular class. This itself I will use. Try to redraw and waste the time. Okay. Let us see here. So there is a holding company, subsidiary company. Now this subsidiary company needs a loan from SBI. Okay. So for that loan, this holding company is acting as a guarantor. Holding company is acting as a guarantor on behalf of subsidiary company for the purpose of getting a loan from a bank or financial institution. Now, who is the service provider? Holding company. Who is the service recipient? Subsidiary company. Why subsidiary company is a recipient? Because they are providing guarantee on behalf of the service recipient, on behalf of this recipient only. No. So here subsidiary company needs a loan here. So they went to SBI. Sir, we want a loan. SBI told, sir, we want someone to give guarantee. Now this S Limited, this holding subsidiary company went to holding company. Boss, we need a loan, but bank is asking for guarantee. Now holding company told, no issue, I will act as a guarantor. So this holding company is providing the guarantee to the subsidiary company for getting a bank loan. So both are related persons. So who is service provider? Holding company. Who is recipient? Subsidiary company. And this service we call it as corporate guarantee. Between two corporates, one guarantee is happening. So this is also supply between related persons only, no? This is also supply between related persons. If it is supply between related persons, what will happen? Rule 28 will become applicable. So what does Rule 28 say? Open market value, like, kind and quality 30-31. Yes or no? But this will not become applicable here. You should not determine the value of supply using rule number 28. But there is one more rule. This is rule number 28 sub rule 1. But we have rule number 28 sub rule 2, which says that in this corporate guarantee, in the case of corporate guarantee services between related person, don't go by rule sub rule 1. Don't go by open market value, like, kind and quality 30 and 31. But instead come to sub rule 2. What does sub rule 2 say? In these cases, the value will be either 1% of amount guaranteed. Either 1% per annum of total amount guaranteed, or actual amount whatever is getting received, whichever is higher, that will be considered as value of supply. So corporate guarantee between related persons. Yes, this is also a transaction between related person. So here rule 28 will come, but here rule 28 sub rule 1 will not come. What is rule 28 sub rule 1? Open market value, like, kind and quality 30-31. Here that will not come. So you have to come to rule number 2, sub rule 2. What sub rule 2 says? In the case of corporate guarantee between related person, the value of supply will be either 1% per annum of the amount guaranteed, or actual commission which has been received, whichever is higher. Let us say there is 200 crores of loan. Loan amount is 200 crores and this amount has been guaranteed by the holding company. So what is the value? What is 1%? If I calculate 1%, 2 crores. But for giving that guarantee, they are getting actual consideration. For giving that guarantee, they are getting actual consideration also. For giving that guarantee, they are getting a consideration of 1 crore. So what will be value of supply? Whichever is higher. 1% per annum of the amount guaranteed, or actual consideration. That is 2 crores or 1 crore. Whichever is higher. Which one is higher? 2 crores. Value of supply will be 2 crores here. So let us say amount guaranteed is 50 crores. Amount guaranteed is 50 crore rupees. So 1% of the amount guaranteed, which will come to 50 lakh rupees. Actual consideration received is 1 CR. Whichever is higher. Which one is higher? 1 crore is higher. So 1 crore will become the value of supply. Able to understand? So in case of corporate guarantees between related person, there don't go by sub rule 1. You come to sub rule 2, 28 sub rule 2, which says that in case of corporate guarantee between related persons, value of supply will be either 1% per annum. Let us say if the loan is given for 5 years. Amount is 100 crore rupees. Loan given is 100 crore rupees, but this loan is for 5 years. 1% into 5, because 1% per annum. 1% into 5 into 100 crores, which will come to 5 crores, or actual consideration, whichever is higher. Able to understand? Clear and comfortable, everybody? Right. So this is what they try to say it here. This is what subrule 28 subrule 2 says. So in case of corporate guarantee services between related persons, special rule will become applicable. 1% per annum of the total amount guaranteed or actual consideration which has been received, whichever is higher. Now, associated with this, there is one more point also which they have told. There is one more circular also they have given. So what is that circular is? Let us say, for example, one individual is there. Director is there. Board of director is there, no? That board of director is giving a guarantee on behalf of the company. There is a person who is acting as a board of director in the company X Limited. Now this company needs a loan from the bank. This company needs a loan from the bank. So now from the bank, they will get a loan, but for that bank is asking someone as a guarantor. Now this board of director is acting as a guarantor for this company to get the bank loan. So this is also service provided by the board of directors to the company. Sir, are they both related? Are they both related? Yes, director and company are also related. So, but is it a corporate guarantee? No, it is not a corporate guarantee. What is a corporate guarantee? Guarantee happening between two companies. That guarantee happening between two corporates. That is what we call it as corporate guarantee. That is what we call it as corporate guarantee. Here, if the individual board of director is acting as a guarantor for the company in which he is a director, that is not a corporate guarantee. But this is also a transaction between related persons. This is also a transaction between related persons. Here, usual rule number 28 subrule 1 only will become applicable, which is you have to determine open market value, you have to determine like, kind and quality, or you have to come to rule 30, or you have to come to rule 31. But here what they have clarified, as per the Companies Act and all, if the board of director is providing a guarantee on behalf of the company, he should not charge any consideration. He should not charge any consideration. So that means for this kind of services, the board of directors should not charge any consideration. That means open market value will be considered as 0 here. So that's why value of the supply will become 0 here. Value of the supply will become 0 here. Very, very important. Very important circular. So in case if an individual board of director is acting as a guarantor for the company in which he is a director for a bank loan, it is not a corporate guarantee. If it is a corporate guarantee, it will come to subrule 2, which says 1% per annum of the total amount of loan guaranteed or this actual consideration, whichever is higher. But in case if the board of director, if an individual person has provided guarantee to the company in which is the director, that is not a corporate guarantee. But this transaction is also a transaction between related person. Rule 28 subrule 1 will become applicable. Either open market value, like, kind and quality. Rule 30, rule 31 will become applicable. But here the department has given circular is, as per the Companies Act, board of directors should not charge any consideration for acting as a guarantor. So literally speaking, open market value will be considered as 0 here, value of supply is 0 here. That means no GST will come here for the purpose of guarantee given by the board of director to the company in which he is a director. Understood? So this one point also you try to remember it. A very important circular. Okay. And further, many other nuances are also there in this particular association. So yeah, so this I will try to wind it up here. This valuation rule 28, I will try to wind it up here. So this is what regarding valuation of personal bank guarantee by the directors to the bank for the company. Open market value will be treated as 0. So this I will try to wind it up. So rule 28, rule 29 we have covered. Now let us come to rule number 29. So rule number 29 will become applicable in case if there is any supply of goods is happening through an agent. If the supply of goods or receipt of the goods, supply of goods or receipt of the goods through an agent, then this rule 29 will become applicable. Okay, so what they're trying to say it here. So if you remember, principal making the supply of goods through an agent, where agent will make further supply, or agent is receiving the goods on behalf of the principal and this agent will make the supply to the principal. Yes or no? So here, even if happening without consideration, this will be considered as supply as per para number 3 of schedule 1. As per para number 3, schedule 1, if the principal is supplying the goods to the agent or if the agent is supplying the goods to the principal, even if without consideration, it will be treated as supply or not. Sir, but how to determine the value? How to determine value? Okay, as per para number 3, schedule 1, this activity of principal to agent and agent to principal is getting treated as supply, even without consideration. But how to determine that value of supply, sir? Here rule number 29 will become applicable. So what rule number 29 says? Very simple things rule 29 will say, not at all complicated. So in case of supply of goods between principal and agent, it is applied, the valuation will be determined by following the following method. Number 1, open market value of the goods. Open market value or 90% of the price charged for supply of the goods of like kind and quality by the recipient to his unrelated customer. So what they have told here, very simply what they have told is, let us say principal is supplying the goods to an agent. So what will be the value? Rule 29 says either open market value or 90% of the value charged by the recipient to his final customer. Agent will make a further supply to the unrelated person, no? In that value, 90%. So either open market value or 90% of the value charged by the recipient to an unrelated person. And if value cannot be determined under A, in case if you are unable to determine the value as per open market value or 90% of the value charged by the recipient to unrelated person, if value can't be determined under clause A, taxable value is determined sequentially by following rule 30 and rule 31. Rule 30 and rule 31. So either cost plus 10% or best judgment assessment. Very simple here. Rule number 29 is not at all complicated. Very simple. So when rule number 29 will become applicable in case of supply of goods only, not supply of services. Rule number 29 will specifically talk about only supply of goods, value of supply of goods between principal and agent. Rule number 29 will not become applicable for supply of services. But if you see rule number 28, it will become for supply between related persons or distinct persons. That will become applicable for supply of goods also, supply of services also. But rule number 29, it will become applicable only for supply of goods between principal and agent. So how to determine value as per rule number 29? Either open market value or 90% of the value charged by the recipient to his unrelated person. If you are unable to apply this, it will be applied by following rule number 30, rule number 31. What is rule number 30? Cost plus 10%. What is rule number 31? Best judgment assessment. Simple. Right. So rule 30 we have already covered, cost plus 10%. Rule 31, as I have told, best judgment assessment will become applicable here. Now apart from that, some extra rules also we have. Rule number 32 we have. Rule number 31A we have. So these are just straight away points which you have to refer to it. So rule number 31A, 31B, 31C, these are all relating to actionable claims. Rule number 31A, 31B, 31C will talk about how to determine the value of supply in case of specified actionable claims are there. No, only 6 specified actionable claims are there. So in those specified actionable claims, how to determine the value of supply, that is explained by rule number 31A, 31B, 31C. First I will talk about rule number 31C. C means casino, like this you can remember. Rule 31C will talk about how to determine the value in respect of actionable claims in case of a casino. In case of casino, how to determine the value of supply. Rule 31C will talk about it. So they say that when someone plays a casino, what will be value of supply? It will be total amount paid or payable by or on behalf of player for buying tokens, chips, coins, tickets, which will be used for gambling, no matter what they are called. So if you go and want to play in a casino, you have to deposit the money and get the chips or tokens. Like you often see it in the movies and all. Some big casinos will be there, some colored coins they will give. So if you want to go and play in a casino, you have to go and deposit the money. For the money you have deposited, you will get the coins. So whatever money you are depositing for getting that tokens, for getting that chips, which you will use it for playing the games in that casino, that amount which you are depositing for getting that chips or tokens, that will be considered as value of supply. Or if you are paying any amount for participating in an event, including game, scheme, competition, or any other activity or process in casino where tokens, chips, coins, tickets aren't needed. Inside the casino also, in some for some games, you need not have any tokens. Directly you can pay the money and you can play the game. So either you are buying the chips or tokens for whatever amount you have deposited for buying that chips or tokens, that will be value of supply. In case if you are not required to buy the chips or tokens, directly you can deposit the money and participate in the event. That money, whatever you are depositing, that will become the value of supply. No deduction for refunds. Sir, this is very important point. Refunds for unused tokens, coins, tickets, chips does not reduce the total value. Let us say, for example, you paid 10,000 rupees. You purchased the coins. Okay. Now you played with some 8,000 coins. 2,000 coins are left. Now, at the time when you are leaving the casino, you are returning that 2,000 coins and getting back the cash. Sir, 10,000 rupees I have paid and initially got coins. Now I am returning 2,000 worth of coins. Sir, what will be value of supply? 10,000 only, not 8,000. 10,000 only. Refunds and all will not be deducted. Gross amount, whatever you have paid for buying the tokens or chips, or amount which you have paid for participating in the event, that will be considered as value of supply. Refunds will not be reduced. And provisions of this chapter override other chapters and etc. What else? One more point. Winnings used by a payer to play further games without withdrawing are not considered as new money deposited. Sir, what is it? Let us say, for example, you paid 10,000 rupees. You paid 10,000 rupees, you got 10,000 worth of coins. Now you have bet that 10,000 rupees you have bet. Now you got 12,000 rupees. 2,000 rupees of gain you have made. 2,000 rupees of gain you have made. So initial 10,000 rupees, now 2,000 rupees have been added. Now this 12,000 rupees you are using it for the purpose of playing next game. Sir, will this 2,000 be added to the value of supply? Will not be added. Will not be added. So whatever money you have made without withdrawing it, if you are using it for playing, if you have made some winnings and you are using it for playing without withdrawing, that will not be added. That will not be added. So simple point here. So in case of casinos, what will be value of supply? Whatever amount you have paid for buying chips, tokens, or any other instruments, or if these things are not required, whatever amount you are paying for participating in the event. Sir, will refunds be reduced? No. Sir, will winnings be added? If I did some winning and using it for games without withdrawing, will it be added? No, it will not be added. Right. So this is 31C. Then we have 31B. Sir, what is 31B? Determination of value in case of online gaming, including online money gaming. So if you are playing online gaming and all, in that case, what will be value? So here also they say that value of supply of online money gaming, including supply of actionable claims involved in online money gaming, should be total amount paid or payable to or to be deposited with the supplier by way of money or money's worth, including virtual digital assets, by or on behalf of the player. So if you want to play online money gaming, for playing that online money gaming, there will be one wallet. In that wallet, you will add money. If you want to participate in the online money gaming, so there will be some wallet of that vendor. So in that wallet, you have to add the money, whatever money you are adding it to the wallet for the purpose of that online money gaming. That entire money added to the wallet will become your value of supply. Any refunds to the player for any reason are not deductible. Sir, I am getting the refund back, sir. Will it be deducted? No. Provisions of this rule will override other provisions. Next, apart from that, if any other things are there, like lottery, betting, gambling, and horse racing, for all other actionable claims. For online money gaming, they have given 31B. For casinos, they have given 31C. For remaining all 4 actionable claims, we have one single rule, 31A we have. So what does that say? In case of supply of lottery by organizing state, in case if the lottery tickets are getting sold by state, then the value will be higher of the two amounts will be deemed as value. What is it? 100 by 140 of the face value of the ticket. Let us say, for example, you are buying a face value of the ticket of 1 lakh rupees. Face value of the ticket is lottery ticket is 1 lakh. So what will be considered as value? This 1 lakh will be considered as inclusive of GST. 1 lakh divided by 100, 1 lakh into 100 divided by 140, or 100 divided by 140 of the price as notified in the official gazette by the organizing state. Let us say the price notified is 80,000 rupees only. So first, in case of supply of lottery tickets by the organizing state, you have to find out two values, either face value or price as notified by the state, whichever is higher. So that amount will be considered as inclusive of GST, that you have to do reverse calculation into 100 divided by 140. So very simple here, in case of supply of lottery by the organizing state, what you should do? First, you determine what is the face value and what is the price as notified in the official gazette. Find out whichever is higher. That amount will be considered as inclusive of GST at the rate of 40%. There was a rate change recently. Previously, it used to be 28. Now it has been changed to 140. So whatever that face value or whatever that price notified in the official gazette, whichever is higher, that will be considered as value inclusive of GST at the rate of 40%. Do the reverse calculation, find out the value. Supply of any other actionable claim, 100% of the face value, like betting and all. In all those circumstances, whatever is the face value, 100% of the face value will be considered as value of the supply of that actionable claim. Okay, right. So this is what regarding actionable claims. Now come to rule number 32. Rule number 32 will talk about some special cases. Let me try to explain that special cases here. In case of money exchange, in case of forex. For forex transactions, they have given different valuation method at the option. So what is that different method of valuation for transactions, for forex transactions? So I have once again a chart here, right? So this is the chart actually. So you have two options. In case of forex dealers and all, they have two options for determining the value. So one is they can follow the usual method, transaction value and all, and other simple method is also there. Some other method is also there. So what is that other method is? Right. So 32 sub rule 2 will talk about it. In the 32 sub rule 2 itself, we have two options. In the 32 sub rule 2 itself, we have two more options. Just 1 minute. Yeah. So 32 sub rule 2 clause A says that buying rate minus buying or selling rate minus RBI reference rate into units of currency. So what one simpler method of determination of value they are saying is, in case of foreign currency, in case of forex transactions, you take either buying rate or selling rate depending on what transaction bank is doing. Let us say, for example, bank is buying the currency. So that buying rate minus RBI reference rate, or bank is selling the currency, selling rate minus RBI reference rate into units of the currency, that will be considered as value. Sir, if RBI reference rate is not available, then what, sir? 1% of the INR amount. If for one currency, RBI reference rate is not available, so then what you should do is total INR amount will be there, no? In that 1%, that will be considered as value. Sir, if both currencies are not INR, so a bank is doing forex, but that forex transaction is happening not in INR. Let us say, for example, USD to GBP, no INR is involved. So in case if both currencies are not in INR, 1% of the lower of INR equivalent of the two currencies at RBI reference rate. So each value, two currencies are there, both are not INR. So each currency equal INR rate you determine. So at the RBI reference rate, whichever is lower, that INR equivalent you take, and 1% of that will become the value of supply. So these are straight away rules, my dear students, no logics and all. This is something which you have to remember. So first option under rule 32 sub rule 2 clause A, buying rate or selling rate minus RBI reference rate into units of currency sold. In case if RBI reference is not available, RBI reference rate is not available, 1% of the INR amount. Sir, if none of the currency is in INR, you determine one INR equivalent of the INR equivalent amount of two currencies at the RBI reference rate, whichever is lower. In that lower amount, 1% you multiply, that will become the value of supply. Sir, one more slab method is also available. So one more alternative option is available. Slab method. Sir, what is that slab method? So it is slab method means like income tax slabs we have, no? So like that they have some slab method. Up to 1 lakh. If currency which is getting exchanged is up to 1 lakh INR, 1% of the amount or 250 rupees, whichever is higher. Minimum 250 or 1% of the amount, whichever is higher. So if the amount of currency getting converted is 1 lakh 1 rupee up to 10 lakh rupees, 1000 rupees plus 0.5% of the amount. 0.5% of the amount exceeding that 1 lakh rupees. Sir, if the amount converted is more than 10 lakh rupees, 5,500 plus 0.1% of the amount more than 10 lakh rupees or maximum 60,000 rupees or maximum 60,000, whichever is lower. Okay. So this is slab method, and between A and B you can choose, and if you have chosen for B, you have to stay in that for 1 year. In case if you want to go for slab method, you have to exercise the option, and in case if you have exercised the option to remain under slab method where you want to use this method for the purpose of valuation, you can't withdraw it for a period of 1 year. For the entire financial year you have to follow the same thing. Okay, so what is the slab method? Just this is important. Slab method is what? On the basis of amount of currency you are exchanging, this limit will be decided. So if you are converting forex up to 1 lakh rupees, 1% of the amount which you are converting or 250 rupees, whichever is higher. In case if you are converting 1 lakh 1 rupee, amount exceeding 1 lakh rupees but less than 10 lakh rupees, 1000 rupees plus 0.5% of amount which is more than 1 lakh. And if the amount getting converted is more than 10 lakh rupees, 5,500 rupees plus 0.1% of the amount exceeding 10 lakh rupees, this total amount or 60,000 rupees, whichever is lower. That means maximum, but if you follow the slab rate, maximum amount of value which you will get is 60,000 rupees. It is getting capped at 60,000 rupees. Clear everyone? So this is what regarding determining the value in case of forex. Then, so this same thing only I have tried to summarize it here. Then we have in case of booking of air tickets. In case if you are providing the services of booking of the air tickets, then what will be your value? So in case of domestic fare, we could take it as 5% of the domestic fare. In case of international travel, 10% of the basic fare. Okay, so if you are into services of booking of air tickets, you can opt for this method. Either in case of domestic travel, you can consider your value as 5% of the basic fare. In case of international travel, you can consider 10% of the basic fare as the value of supply. Then in case of insurance policies, what could be the value? In case if the policy is only for risk cover, no investment, nothing. If the policy is completely for providing risk, no investment element is involved. So policies with only risk cover, taxable value is equal to entire premium. Let us say you are selling one policy which is providing only risk cover. There is no investment element involved. If you are collecting 10,000 rupees of premium, this entire 10,000 rupees will be considered as taxable value. So if there is an insurance policy which is having only risk cover, no investment or saving element is involved, entire premium, whatever you have collected, that will become the taxable value. So in case if there is a policy with a dual benefit, in which there is a risk coverage also, investment portion also. And what is the investment portion that has been intimated, that has been informed to the policy holder? Very important. If the insurance company is selling an insurance policy in which it is having two options, there is a risk coverage also, investment element is also there. And to the policy holder, it was clearly intimated. What is that investment portion. So in that case, taxable value will be gross premium charged minus amount collected for investment or savings. Let us say you are collecting 10,000 rupees of premium, and in that 70% is risk cover, 30% is for investment. So it was intimated to the policy holders, or 30% is for investment purposes. So gross premium 10,000 rupees minus that investment portion which is 3,000, 7,000 rupees will become the value. On that you are required to pay the amount of GST. Sir, in case of single premium annuity policy, sometimes some policies called single premium annuity policies will be there. In case of single premium annuity policy, taxable value will be considered as 10% of the single premium charged from the policy holders. Next, where allocation for investments or savings is not intimated. If the allocation for savings or savings is not intimated, then the taxable value will be considered as 10% of the single premium amount. In all other cases, taxable value will be 25% of the premium charged from the policyholder in the first year. For the first year premium, 25%. For the subsequent year's premium, 12.5%. So once again, remembrance here, no logic and all, nothing is there. So very simple, if I have to recap, if there is a policy with no risk, with only risk cover, no investment element, full amount, full premium will be considered as taxable value. If there is a policy with risk cover also, investment plan also, and if the policy was, if it was intimated to the policy holder, gross premium minus the investment portion. So single premium annuity policy, 10% of the single premium annuity premium, whatever you have collected. In all other cases, for the first year premium, 25% of the value of the first premium. For subsequent year premiums, 12.5% of the premium amount, whatever you have collected. So that will become the value of supply. Understood. Next. Second-hand goods, this also will try to cover. So in case of dealer of second-hand goods, for him also a separate valuation option has been given. So in case of second-hand dealer goods, GST can be paid on, normal GST is charged on the transaction value, or for second-hand goods, GST is charged only on margin. Sir, what is margin? Selling price minus purchase price. Let us say, for example, if I am a second-hand car dealer, I purchased a car at 2,50,000. Now I am going to sell that car for 3 lakh rupees. Usually what will happen? This 3 lakh rupees will become my transaction value. Whatever rate of GST is applicable on the 3 lakh rupees, that rate I have to multiply and pay the amount of GST. But for the second-hand dealers, they have given one option. So what they have told is determine margin. Sir, what is the margin here? 50,000. On that 50,000, if you pay the GST, it will be enough, provided you are taking with a condition that you should not avail ITC on your purchases. Provided a condition is what? You should not be availing ITC on your purchases. If you give up your right to claim ITC on your purchases, we will give you one margin option. So what is that margin option? GST will be charged only on margin. Sir, what is margin? Difference between purchase and selling price, provided if ITC is not availed. Sir, what if there is no margin? Let us say, for example, I purchased it for 2,50,000. I am also selling it for 2,50,000 only. Sir, no margin is there. No requirement to pay any GST. And if selling price is less than purchase price, negative value you can ignore. Let us say 2,50,000 you have purchased a car, but you are selling it at 2 lakh rupees only. I made a loss, sir. Ignore. Not required to pay any GST. Okay, so this is one simple rule you remember. Rule 32 sub rule 5 says that in case of second-hand goods, in case if the supplier has agreed not to avail ITC, if he wants to give up his ITC claim, so he can pay the GST only on the margin. Sir, what is margin? Selling price minus purchase price. Sir, if there is no margin, no need to pay GST. Sir, if I made a loss, let us say my selling price is less than the purchase price, ignore the negative value, no need to pay the amount of GST. Understood? But this will come with a condition. What is that condition? Supplier should not avail the ITC on that second-hand goods, whatever he has purchased. That's it. Now some tax rates in case of old and used motor vehicles is there. This is some circular. This I am not taking it through. This is very rarely tested because some advanced circular it is. It will not be, time will not be enough for me to take you through that circular. So I am skipping it. So I am coming to the, but very rarely asked area. So that's why I am skipping it. Now I will come to rule sub rule 6. So what is it? In case of token, voucher or stamp redeemable against goods or services equal to money value, this is also irrelevant because vouchers are now no longer treated as supply. This is also irrelevant. This 32 sub rule 6 also you can ignore. Next. What is this sub rule 7? The government can notify some services where they can consider value as nil. This is one special power where the government has reserved their power. The government can notify some services. In those services, if the recipient is eligible for full ITC, they can consider the value as nil, open market value as nil. One example we have already seen, services provided by board of director, individual board of director providing services to the company by way of giving corporate guarantee, their value itself will consider it as nil. So like that, government can notify some services. For that notified services where the recipient is eligible for full ITC, they can consider value as nil. Okay, right. Next. 33 pure agent, I have already covered it. Yeah, I think that's all. In case this one, rule 34 also I'll try to quickly cover it. In case if for supply whatever you are making, if it is denominated in foreign currency, you are making some supply, your invoice is given in foreign currency. Now you have to convert that foreign currency into INR for the purpose of calculation of GST. In case if you are making some supply, for that supply you are giving invoice, but invoice is denominated in foreign currency, but you are required to pay the GST in INR. That means that invoice which is denominated in foreign currency, it is required to be converted into INR. Sir, which exchange rate I have to use? Which exchange rate I have to use it for the purpose of converting that foreign denominated invoice into INR? Which currency rate I have to use? So if you see, for goods, relevant rate of exchange for determining value of taxable goods is rate notified by CBIC under 14 of the Customs Act, which is prevalent on the date of time of supply of the said goods. So whatever is the time of supply, at the time of supply of the said goods, whatever exchange rate which is notified by CBIC, that rate I have to take in case of goods. In case of services, I have to take the rate which is determined as per GAAP, generally accepted accounting principles. As per the GAAP, whatever rate is determined, that I have to take, that too which is prevailing on the time of supply of the said services. So very simple. For goods, you have to take CBIC rate. For services, you have to take GAAP rate. That's it here. So that's all. This is what the important discussion from the value of supply chapter. I hope you're all able to grasp the concept in a quick manner. Right. So with this, I'm trying to wind up this value of supply also. So I will wind up the today's marathon series. In the next session, we'll try to continue. Tomorrow, we'll try to continue our revision series.